You're watching TBPN! Today is Monday, August 4th, 2025. We are live from the TBPN Ultra Dome.
That's right.
The Temple of Technology,
the Fortress of Finance,
the capital of capital. We were recently featured in the New York Times podcast, their Headlines podcast, and they quoted that segment of the stream, and we snuck in an air horn. So
That's
we're bringing the air horn to Legacy Media. It was very satisfying. What a week last week. Wild.
Absolutely insane.
We did the Odd Lots podcast. That's out now. You can go listen to that. Bloomberg Odd Lots with Tracy Alloway and Joe Weisenthal. Had a great chat with them about the AI talent wars and who Mark Zuckerberg's white whale is in the Moby Dick analogy. We kind of settled on Ilya Sutskever, but we're going to read the book. We're going to have Joe Weisenthal on the show later and get to the bottom of the full metaphor of if we are living in Moby Dick world, who's who? Who's Ahab? Who's the whale? There's a whole bunch of funny side characters that I was trying to map out to different AI people. And I only got like halfway there, but I want to do that. Anyway, big news from Microsoft. This was interesting. So this is from the Wall Street Journal. Microsoft is an AI darling, but its core businesses are booming too. Did a bunch of reading into this. Also, let me tell you about Ramp, Time is Money, Save Both, easy to use corporate cards, bill payments, accounting, and a whole lot more all in one place. I love this one.
You know what, John?
Switch your business to ramp.com. Love that. Anyway,
quick note.
Please.
Microsoft.
Yes.
4T.
4 trillion. They did it. Hit that gong, Jordy. Hit that gong, Jordy Hayes. We found a video of somebody playing a gong like much more professionally than we do, where they like have different tools and they can bring out different songs. They can really make it sing. And so, late night has the live band. I think a live gong player might be in our future. I think if it's ever discovered that TBPN goes bankrupt because of our incredibly high cost structure,
it will be because we have the world's foremost gong athlete,
yes,
gong player,
yes,
gong artist.
Yes, truly the greatest gong player of all time will be on staff.
But you know why the Microsoft news or hitting that number is meaningful?
Why?
It's because everybody has always said Satya is more of a 2 to 3 guy, right?
People were saying that.
Saying, he's really good in that range.
He's in that range.
I don't know if he's in the
4 trillion club.
In the 4 club.
Got it.
There's not a lot of guys in that club. There's one guy.
Yeah, Jensen Huang, and he's a founder.
Founder mode.
This
right?
is is Satya in founder mode, or is founder mode defeated? Because if a manager mode can take the company to 4 trillion, all bets are off. Put your company in manager mode. As long as you can recruit Satya Nadella to be your CEO, I think it's okay to step back.
Manager-run companies can excel.
Exactly, yeah. So if you're like, I'm a little burned out as a founder, I want to take a break, I'm going to step back, I'm going to get a manager in, normally very bearish, just give Satya Nadella a call and you'll be okay.
Give him the reins.
You'll be okay in that case. Anyway, this stream is made possible by Restream. One live stream, 30 plus destinations, multi-stream, and reach your audience wherever they are. Very exciting company. We're happy to partner with them. Anyway, so from the Wall Street Journal, Microsoft's blockbuster earnings last week. They blew out earnings. It was very exciting. They cemented its status as one of the biggest winners in the artificial intelligence boom. We knew this. Satya had carved out just a massive amount of territory. GitHub Copilot, first real major breakthrough product that was monetizing on top of GPT 3.5. Great product, obviously led by Nat Friedman when he was there.
Last we heard, it was at around $500 million in ARR,
something
but that
like
was
that.
2 months ago, so it's probably in the billions now.
Yeah, probably bigger. And then the crazy OpenAI deal, they got in very early. They have this massive revenue share. They have an ownership. They get a copy of any software that OpenAI writes, basically, or acquires. That's kind of crazy. And so
Satya did seemingly one of the best deals of all time for Microsoft.
Potentially, yeah. I think so. It's hard to. I mean, it's an awkward situation now, and it's a really hard decision.
Sam is renegotiating the deal.
Yep. And Ben Thompson was noodling on this, like, should they take the money now or should they play it more like a venture style bet? What is the role of the CEO of a $4 trillion public company where the shareholders have different expectations? They're not seeing, if you hold Microsoft stock, you're not feeling like you're an LP in a venture fund.
Yeah.
So if the CEO comes to you and says, hey, look, we're taking the cash flow now, we're going to dividend some of this out, we're selling down the position, we're thinking strategically about this, as opposed to just, we want the highest multiple. We want to ring the gong on the deal. That could be reasonable. So obviously we're tracking where that goes. But they also have Clippy, generational precursor to potentially all the AI agents, the original AI agent, Clippy. Yeah. Potentially making a comeback.
The original superintelligence.
The original superintelligence. And
that was the first time they had to move the goalposts.
And this is why we're worried about getting paperclipped, because Clippy will become too strong. I mean, with the power of OpenAI and Microsoft Azure, anything's possible there. So anyway, outside the AI race, Microsoft is minting money from corporate customers spending on regular technology, long a sweet spot for the company. Many companies are shifting from buying their own IT equipment to renting it from Microsoft through its cloud's computing service. They are also renting more standard issue computing stuff, hard drives for data storage, for example, to support their AI efforts. And so this is the key stat from the earnings call that the Wall Street Journal is highlighting, and then we'll kind of dig into this number and what it means, because there's a lot of different explanations for what could be going on. But Microsoft and the CFO and CEO didn't necessarily give all the context that we'd like to set this definitively, but I think there's some really good theories floating out there. So the quote from the Wall Street Journal is, a large chunk of the recent strong growth in Microsoft's cloud business, called Azure, stems from that. More than half of Azure's 33% revenue jump in the company's March quarter came from non-AI services, While the company didn't give a comparable breakdown of the cloud unit's 39% growth in its June quarter, it said that the core infrastructure business, Microsoft's lingo for its non-AI cloud business, was the driver. Jordy?
Massive win for enterprise SaaS. Just good old-fashioned SaaS. We had some theories.
So we had some theories. It's not SaaS.
Yeah,
they're not selling SaaS.
So it's people migrating from on-prem to
it's what's called
cloud.
Infrastructure as a service.
Yeah.
So there's software as a service. That's when you go and get Teams, or you go and get a subscription to Excel in the cloud, or Outlook in the cloud. That's software as a service.
I was saying more traditionally, someone
people
else
building. Using it as infrastructure as a service. Then there's also platform as a service. That's like Heroku on AWS, where you go and you deploy an app. You could think of maybe even like a Replit as like a platform as a service almost, where they're hosting you, but they're not just providing you the raw infrastructure. Azure's core infrastructure business is essentially infrastructure as a service. IaaS is the term. And that means, you want some CPUs and some hard drives and some Ethernet cables and moving stuff around, data transfer.
You had an interesting thesis offline earlier.
Yes.
You comped it to people in the internet era buying a computer. They hear about the internet. They're like, hey, I think this might be a thing. I should get a computer.
Yes.
And they just buy a computer. And now you could see something, where companies say, hey, this AI thing might be big. We should get on the cloud.
You want to set yourself up for it. And I think if you have a whole bunch of data in some sort of on-prem, you have a data center for all of your data in a bunch of hard drives, and you have CPUs that can do different workloads and data workloads, and maybe you're using some SaaS on top of that. But you realize that you're never going to be in a position to buy 100,000 H100s, and you're going to wind up being a leaser of that for some small fine-tuning run.
Or just using other people's application layer products.
Yeah, and so the integration that comes from being in the Azure ecosystem, that could be a driver. There's a few others. When I think about the core, the AI Azure services, I think of that almost as, it is SaaS. Like if you go to Azure and you say, I'd like to, put my credit card down and I want to be able to use the GPT-4 API. And I also want to be able to use Llama 3. And I also want to be able to use DeepSeek. And I want to be able to call all these APIs within my product. I almost think of that as tokens as a service. Like it is SaaS, but it's something else. And I think these token factories, I think this idea of how much revenue are you generating from your token generation business is really what we're talking about when we talk about Azure's, core AI products versus the infrastructure. But there's a bunch of interesting wrinkles that could be going on within the classic core infrastructure business. So this, of course, is virtual machines. You just want a Linux box with a CPU to host a website. That's something that you do on Azure. Storage, networking. Okay, I want to store all my data. You could go to AWS and store it in S3. You could go to Google, store it in BigQuery. You could also go to Azure and fire up any sort of storage database or just raw hard drives, and then networking, moving stuff around. So this is the infrastructure as a service versus tokens as a service. They're higher level AI APIs. So GPUs are so the question is like, why is their infrastructure as a service growing faster than their tokens as a service product? You would think that Microsoft is going to their enterprise clients and saying like, you need to build AI, you need to bring AI into your products, and we have all the best APIs, so just buy tokens from us. And you would think that would be the boom.
Well, couldn't the other factor here be that they are massively supply constrained on the GPU side? And they have this, multi tens of billions or hundreds of billions of dollars of backlog that they can't fulfill. Meanwhile, they had a, more kind of like predictability on the traditional data center cloud side that they were able to scale up to. So that feels like a potentially like a pretty big driver here.
Yes, definitely.
But still shocking.
And so as companies come out and they say, okay, we are scaling our hardware and software our technology footprint broadly. going into this AI era, we're excited about this stuff. Well, we're also going to need more databases. We're going to need to put more data in those databases. We're going to need more CPU workloads. We're going to need more of everything. And Microsoft's like, yeah, of course, we can definitely get you a whole bunch more hard drives and a whole bunch more CPUs. We're not constrained on that at all. And the CapEx is keeping up, so they're able to service that. There's also an interesting thing where tons of AI stuff can technically be happening inside the core infrastructure bucket. You just don't necessarily know what's in there. So some examples are like, if let's say you're a pure AI company, or you have a new AI workload, you could go to Azure and say, hey, I'm going to do my own AI thing, but I need a ton of storage for data because I'm going to be training on it. I'm going to need a bunch of networking to move that data around when I do a training run. So that could be driving core infra up. And then also, if a bank hypothetically spins up a huge cluster of H100 GPU virtual machines to fine tune an open source model like Meta's Llama 3, this would show up as core infrastructure, not Azure AI services. And so that's like textbook AI boom. But it's just happening in the wrong bucket. And then I also saw a post that potentially ChatGPT counts as Azure core infrastructure, because they're not serving ChatGPT through the Azure AI API. It's not this like snake eating its tail Ouroboros. It's like OpenAI just came and said, give us a whole bunch of.
The headline itself ends up becoming pretty misleading.
Exactly.
Because, and again, this was probably, a lot of people were reading into AWS's growth, the reports that, Andy, or the comments Andy had given on AWS last week.
Yep.
And the big thing that AWS is missing is having a ChatGPT building on top of AWS, right?
Yeah,
There's no dominant consumer product, at least at that scale. ChatGPT, I think as of this morning, somebody was estimating getting to 1 billion weekly actives this year, which again, those types of products don't, the power law is like extreme, right?
So if you, I believe Anthropic is pretty tightly hitched to Amazon, and I think the next big cluster from Anthropic will be powered by Amazon for the most part, and so they're getting there. Certainly if they're building all the infrastructure for cloud.
But again, that would show up on
core
token generation side, like more of the
No. So if Anthropic goes to AWS and says, we want you to build a huge data center to serve Claude Code for us, that's going on in infrastructure. Not actually APIs. But when you go to AWS and you're just some random company and you say, I need a database and I need some storage and I need a web server and I also need a bunch of tokens from whatever model you can serve me. And they're like, we got Claude. And then you're like, let's pull the Claude tokens into my app.
It's a good model.
That's token as a service. What?
It's a good model, sir.
It's a good model, sir. Exactly.
The one thing that stood out to me, that has stood out to me across this year with Microsoft, is they've done more layoffs this year than the past 3 years before that combined. So 2022, 2023, and 2024.
That's crazy.
And so this just shows the level that Satya is operating at. Is like the company has been on a tear this year, performing exceptionally well, and he's still thinking about how do we get more and more fit.
So to be clear, literally every piece of Microsoft business is growing and at a very solid clip. So Microsoft 365 commercial cloud business, which houses remotely accessed versions of Word, Excel, other productivity software, that grew at 16% from a year earlier. So that's like, it's not the most insane growth rate, but that's still crazy because you think about who doesn't have Excel that needs it? Like who are these people who are like, you know what? 2025 is the year that my company's getting on Excel. We're doing it.
Well, it's just crazy when you compare it to AWS growing at 19%. Obviously very different scales. But
totally.
You would think you don't want to be in the same ballpark as...
And so that was the news with AWS, if you missed it. They beat earnings, they did very well, but they weren't growing as fast as the others. The other cloud platforms, Google and Microsoft. And so the Amazon stock traded down And I mean, the narrative around AWS is different because Microsoft has OpenAI, Microsoft Research, and has GitHub Copilot, and is like really moving things forward in the AI world. And Satya's seen as someone who goes on the Doorcash podcast and talks about AI, and it's clearly like really on top of it. Where and obviously Google has Gemini and a million different products and strategies around rolling that out and staying on the frontier. I mean, they have a frontier lab internally, and Amazon's just not there either on the partnership side or on the core like training frontier lab side. And so it's a little bit of both. Anyway, let me tell you about Figma. Think bigger, build faster. Figma helps design and development teams build great products together. We had a great week in New York celebrating Figma and the IPO. Stock's been up, stock's been down, wild ride, but we are still very happy to be partnered with Dylan Field and the Figma team. And I'm super excited to see what happens next because
Thursday was such an incredible day. Just getting if you didn't get a chance to listen, we talked with the seed lead investor, all the way through, of course, Andrew Reed, who led the C.
Yep.
And then capped it off with Dylan, and also got to speak with Lynn Martin, president of the New York Stock Exchange, as well as Chris, the CTO of Figma. So really incredible day, and it's just very proud of the Figma team.
Yeah, it was awesome. In one sense, investors might prefer to see AI businesses driving growth. That, after all, is what has driven the company's valuation through the roof. But tech companies' stocks arguably hinge on too much on AI. To the extent that they can keep increasing other revenue streams, they are on more solid financial ground. Of course, none of that means anything if all of the growth is coming from OpenAI. But at the same time, does anyone really think ChatGPT is Yahoo anymore? They're generating what, $1 billion a month in revenue at this point. Everyone uses the app. It's installed everywhere. Like that token demand is not going anywhere. That infrastructure demand is not going anywhere. So
on the other side, Amazon is down just over 9% since Thursday. Since earnings.
Wow.
And then this morning, unrelated, they announced that they're shutting down Wondery, the podcast studio they acquired in late 2020.
Wait, why did Amazon? And the market's way up? Wow, Nasdaq's up 1.8% today after a brief sell-off on Friday. Good news.
Bear market is over.
Yeah, we were so over, but we're already so back. It's fantastic.
Yes. Love when that happens.
Markets go up, markets go down, but the march of technological progress, the arrow points in but one direction.
That's right.
And its march is relentless. There is another silver lining for Microsoft. Non-AI sales can be substantially more lucrative than AI ones. Non-AI gross margins within Azure were around 73%. Wow. That compares to 30 to 40% gross margin for AI. He estimated because of the huge cost of setting up AI infrastructure, that makes sense. You get more margin on just a bunch of CPUs and databases that you've harnessed and built everything around. Also, you still have that interesting dynamic where it seems like all of the cloud, the hyperscalers, don't really compete on price because they're all pretty comparable, but they seem to all have really good margin.
Coca-Cola dynamic.
That's what it seems like.
Yeah.
I'm not exactly sure if there's something else that's more fundamental going on.
And the Coca-Cola dynamic is like, I don't know if we, it's hard to tell what conversations were off air or on air, but John last week, forget when, was describing how you would think that Coca-Cola or Pepsi would decide to get aggressive on price to try to gain market share and get people to switch. But ultimately, that would just lead to a price war with both companies, massively eroding their margins, and then
it'd all be RC Cola coded then.
Yeah.
Every.
So if you have a fierce competitor, consider entering an unspoken gentleman's.
That's the
maybe a gentleman's agreement.
It's not even a gentleman's agreement. It's not. It is unspoken, but it is It is a natural game theoretic Nash equilibrium. Like it is the natural state of things that both sides understand that to go to war would be mutually assured destruction, and so they don't even need to talk about it. And so instead, they both agree to keep prices where they are, and instead compete on marketing.
Product.
Compete on marketing, really.
Yeah.
Yeah. I mean, they don't reformulate that often. They mostly compete on marketing, and that allows them to have this continually compounding business, and that's why it's in the The Warren Buffett portfolio. Coca-Cola. He's been in there for a long time. And Pepsi's been doing well,
and
too.
he was a DAU, of course.
He was a DAU of Coke.
Still.
Diet Coke or Coca-Cola?
Diet Coke.
I think Coca-Cola?
No, Diet Coke.
Oh, he's a Diet Coke guy? I feel like he was a Coca-Cola guy.
Warren?
Yeah, look that up. I want to know. Anyway, I'll keep reading from this Wall Street Journal report. Luckily for Microsoft, demand for lucrative non-AI services appears to be reasonably strong. Measures of broad IT spending.
Right.
There we go. You know
he
why?
He was a regular Coca-Cola guy.
You know why? It's because it has corn syrup in it. It's literally corn grown from Mother Nature, from the earth. And then syrup, it's what you put on pancakes. Like, it's the most wholesome combination of foods you could imagine. Maize. This is something that's been grown in America for generations, for centuries.
Corn is so popular in Nebraska, right? It's grown everywhere.
Exactly.
It's culturally
Take corn
significant.
and the syrup that you put on pancakes. It's the most American, most wholesome ingredient. It's not this like refined sugar, this crazy stuff from somewhere else. No, it's American.
Corn syrup.
There's nothing. It's Lindy. Corn
syrup.
Yeah.
Don't
worry about it.
Seed oil haters are in disbelief.
In shambles. That we need to return to corn syrup. None of this. None of whatever's in this Coke Zero.
Yeah, your grandpa was drinking corn syrup.
Yeah.
Buddy.
Oh, and it's too good for you because you read a couple posts on X.com. Think you understand something better than corn? Delicious corn on the cob. Something you have at a barbecue. Oh, now it's too good for you? Can't possibly have corn? What's next? No apple pie? What's next? No rotisserie chicken? No turkey on Thanksgiving?
Somebody's going to listen to the show for the first time today and just go raging DMs for you promoting corn syrup consumption.
It's as American as apple pie. And Warren Buffett knows best. He's doing great. End of one study, sort of a Brian Johnson.
Yeah.
He's sort of the Brian Johnson.
He's the original Don't Die.
Yeah. And he's been doing fantastically on that front.
Yep.
He's great. Anyway, measures of broad IT spending were fairly muted at the start of the year as companies pondered the impact of Donald Trump's tariffs, and concerns bubbled about the health of the global economy. Attitudes appear to have improved somewhat in the second quarter, though. A UBS survey of cloud computing customers in July showed a clear improvement in tone about spending. Most were moving forward with efforts to migrate computing work to the cloud. They're like, this internet thing is real.
It's real.
We got to put the data in the cloud.
We held back as long as we could.
But it's 2025. We have no more excuses. The tariffs, that's come and gone. Now's the time.
We were resisting the 21st century, but we're a quarter of the way through.
Put the data online.
It's not going away.
So let's use the computer online in the cloud.
Put the docs in the cloud. Bud.
Put it in the cloud.
Just put the docs in the cloud.
Put the fries in the bag. Anyway, and put your compliance process on Vanta. Automate compliance, manage risk, improve trust. Vanta's trust management platform takes the manual work out of your security and compliance process and replaces it with continuous automation, whether you're pursuing your first framework or managing a complex program. In the longer term, there is little question that cloud computing is going to grow in ways that play to Microsoft's strengths. Its rivals, mainly Amazon.com and Google, are growing quickly too, but don't have all of Microsoft's broad corporate software offerings that enhance its cloud footprint, even outside of AI. Amazon on Thursday said its cloud unit grew at 17.5% in the June quarter, disappointing investors and forcing CEO Andy Jassy to answer questions about Azure's outperformance. Why are you getting beaten? You created this category. You created this product. Why is Satya Nadella?
You are cloud.
You are the cloud. You are the cowboy of the cloud, and you're getting put out to pasture. Recent quarterly earnings in Azure's favor were really just moments in time. He said.
Look at that chart, John.
Wow, that's worse than I thought. I wasn't sure where we had that pulled up.
I mean, it would have been hard to predict 5 years ago that we'd be sitting here with Microsoft at $4 trillion and
what's Amazon at?
I think 2.2 trillion.
2.2.
2.27.
2.27. Okay, so almost double.
Still magnificent, but
you got to keep fighting. The company's stock fell 8% Friday, and it looks like it's still sliding.
Down even more.
The question for Microsoft's investors then is less about its prospects than its valuation. The company's stock is up nearly 40% since the beginning of April, pushing its forward price earnings multiple above 33. That's a bit richer than Amazon and a large margin above Google, which is trading at a multiple of roughly 18 times. That should be easier for investors to digest because, while Microsoft's AI growth is real, it is far from the only thing going right at the software giant because they got Excel. They got core infrastructure. They got AI, APIs. They got tokens as a service, infrastructure as a service, and software as a service. They got the royal flush. It's going well over at Microsoft. They won't need to call McKinsey, but maybe Amazon.com will. And that brings us to our next story, which is
before we got to jump in quickly.
Graphite, code review for the age of AI. Well, Graphite helps teams on GitHub shift higher quality software faster. I'd love to do an ad read, Jordy.
Very clean.
Thank you.
We got to hang with Merrill.
Yes, we got to hang with him
last Thursday, which was
in
fun.
New York, which is great.
He came with a tux.
He looked fantastic.
He looked incredibly sharp.
Yes, it was great.
Great sign of respect in our culture.
Yes.
Well, American Eagle Outfitters Inc. is up 23% today after Trump came out with a lot of excitement for the advertisement this morning. I'll let people go read it, but he did describe it as the hottest ad out there, and it certainly struck a chord last week. But anyways, let's jump into this next story.
Really quickly, before we go the battle for the Mag 7 is heating up. Microsoft is now in the 4 trillion club. Let's go to the Poly market for the largest company at the end of 2025. NVIDIA has a solid handle on it. As of December 31st, they are expected to be the largest company in the world at 63%. Microsoft is at 28%, but climbing up from 22% earlier. Apple has been falling. They were the largest company, and now they are falling down to just 6% chance. And of course, Tesla's hanging out there at 3%. Anything could happen with Tesla. One crazy move, one naturally aspirated V12 Cybertruck, and boom.
That's all it would take.
It's a $5 trillion stock.
What about a V12 Optimus? Like a gas-powered.
Okay, I have a pitch for you. Richard Mille of cars.
A Richard Mille for the streets.
Richard Mille for the
Instead
streets.
Of a racing machine.
Basically, the pitch is that now it's routine. I would say most people, if they put their minds to it, they'll be making $100 million a year. Seems like that's kind of the benchmark for like you did okay in life. $100 million a year, even a $1 million Ferrari is not really going to stand out. That's 3 days of income, right? So we need a car brand to come out where the floor price is like $20 million.
Yeah, Bugatti doesn't quite get you there.
And the thing with the Bugatti is that it's like this hypercar, 2,000 horsepower. It's so extreme. The whole point of the Richard Mille is that you can wear it to the gym, but it's $250,000. So I'm looking for something that's like
a daily
$20 million, $20 million sedan, $20 million minivan, $20 million
pickup truck,
just crossover, just mid-size SUV, $30 million. This is what we're doing here. This is what we're going to do. Because a lot of these AI researchers, they don't want to pull up in a Bugatti.
Yeah.
But they have the money to spend.
Something a bit more understated that still says to the right audience, I spent tens of millions of dollars on my daily.
Exactly. That's definitely what they're going for over at MSL. If you pull up to Meta Superintelligence Lab, you don't want to flex, but you want people to know. You know?
We need satellite imagery of the MSL parking lot.
Yeah.
That would be funny if it just looks like a car meet.
Yeah.
Just everybody has like a SVJ,
Koenigsegg, LaFerrari,
F40.
Somehow I think it won't be that at all. It won't be that at all. But do you think that there's actually an opportunity to start a new car company that it takes the Richard Mille approach and is 10 times what the luxury cars are? So like maybe it's not 20 million, but like, you know, a G-Wagon is a functional car in the $200,000 range. Something at $2 million.
I think the thing with RM is they made something that was light and incredibly durable. and that was effectively.
You don't think you can make a light and durable car for $2 million, Jordan? What are you talking
world's
about?
lightest.
What are you talking about?
I mean, that'd be interesting. It just drives like in a go-kart. It's just totally insane.
Yeah.
But it feels like
I don't know
it
that
came
you
out
necessarily
with.
need to optimize
It wasn't
for performance.
just. It was in aesthetically in an entirely new category.
Yeah.
It had the new levels of performance.
Yeah.
Within the category broadly from a durability standpoint. So I think
with the RM, it does stand out. It looks completely different, but it's still in this weird watch world where to just a completely average person, it's not as bold as a Cybertruck. It's still an if you know type accessory, right? And so that's where you need to target. It needs to look kind of like, is that a BMW or an Audi or a Model Y? It's like, it blends in a little bit.
I think one reason, not to crush your dreams,
please.
One reason, potentially many, that this is not as exciting as it sounds. I mean, I want to drive it, to be clear.
Yeah.
But I think that the automotive regulations around, you need to have a seatbelt like this. The seats need to work like this. It needs to be able to handle this type of.
Okay. Maybe there's some sort of like, you know how Steve Jobs famously bought a new 911 every single year?
It was every 90 days, I thought.
I think you're right. Every 3 months, Steve Jobs would buy a new Porsche 911 so that he didn't ever need to have a license plate on it. Just for anonymity, I suppose.
Yeah.
So he would never be identifiable.
Which is potentially an incredible excuse for being just like, I like to drive brand new cars.
What is breaking in 3 months on a 911?
The new car smell goes away by that point.
Maybe he just really loved new car smell. He's like, I could never do a new car smell air freshener. That simply won't do. So I have to buy a new one. And then later in life, I believe he switched to Mercedes. And I think he got the SL63 or something equivalent to that. So like the 911
Great
equivalent
taste.
in Mercedes
Great
world.
Taste.
But yeah, maybe that's the hack. So you find something that would never be approved, but you do some crazy thing where you bring it in on show and display and you can only drive it a few thousand miles a year, but then you're swapping them out. And so you're kind of doing like a subscription. And so your real cost to own is in like the 5 million range. But the beauty is that you're getting something that's just a complete regulatory end run around the rules so that you wind up with this very unique, very different, experience, but only made possible at the extra high end.
I think at that point, helicopter.
Maybe helicopter's the move.
Let's get into the next story. The Journal says AI is coming for the consultants. Inside McKinsey, they're saying this.
McKinsey?
McKinsey. Somebody's got a case of the Mondays.
Yeah,
McKinsey. They say this is existential.
I was talking
with a buddy. Yeah, I was talking with a buddy who we were talking yesterday, or not yesterday, last week, and he said, word for word, adopting too much AI will hurt our bottom line.
That's right.
And that totally makes sense, but it's not something that lawyers are actively saying out loud because you don't want to be the law firm that's anti-tech. If you go out as if you're, one of the top 100 law firms, and you're like, we're excited about the potential of AI, but we won't be adopting it internally because naturally it's going to hurt our profits, which you can just translate to, we're just not going to be able to bill our clients for the same number of hours. And so that statement made me bullish on, why am I blanking on the name of this company? We had this company on, not Harvey, the other one that is doing just like contract, like NDAs and a few other types of contracts, but they're an actual law firm.
Oh, interesting, yeah. Kind of the Atrium ClearSpire model.
Similar to that. It's
fascinating model. I don't know if you remember this, but Justin Kahn, when he started Atrium, had a very complex corporate structure where the company was half a law firm, an LLC, which is the traditional corporate structure for a law firm and employed lawyers. And then there was a tech startup C Corp that was bound together with a master service agreement or something like that. So these two companies were combined to be a tech-enabled law firm. And it was probably a good idea, just a little bit too early. But interestingly, there was another attempt to do the exact same thing 10 years earlier called ClearSpire, and that didn't go well either. And it was started by some all-star lawyers and some technologists, and they came together and they were like, let's build this AI enabled law firm. Maybe now is the right time to build the AI native law firm, but I don't know that they need to be doing technology development. I think that the next world might be, you have a power law winner in legal AI tooling. Maybe it's Harvey, maybe it's someone else, or a combination of firms. And then you have a very, very small team of high EQ deals guys, lawyers who are phenomenal at the human element, thinking creatively, coming up with crazy structures, understanding. Are you familiar with the battle of the forms? This idea in law firm, in the legal world.
Not familiar, but I can guess what it looks like.
Basically, if you talk to most lawyers, they will tell you that you can express almost the exact same legally binding theories or like rules in a contract or bullet points in a contract. Everything you want in a contract can be expressed both in 1 page or 100 pages.
Yep.
And so which one you choose to send to your counterparty is like an aesthetic choice. It's like for certain deals, you want to send the 100-page contract because you want to send the message that like, we're taking this really seriously, we're thinking of everything. But for other people, you're more like, we want to show that we're moving quickly, we want to use the safe, we want to use, and structurally it can be the exact same deal. And so a good lawyer will know when to send a lot, when to send a little, when to slow a deal down, when to speed things up. And so you get a bunch of folks who are great at that type of legal thinking, the creative thinking, the human element, the relationship building, the golden retriever mode. And then you empower them with the best in class legal research and analysis tools to actually instantiate and do all the grunt work. And then separately, you have a company like Harvey that's building the tooling that then sells to the team of humans, and that law firm will have a very different cost structure, very different dynamic. Might even look like an older school law firm where it's just a few partners and
one thing I know,
people.
Lawyers are not going down without a fight. They're like,
absolutely,
we're making 90% less per case. We're gonna initiate 10 times as many lawsuits.
That might be the equilibrium here for sure. For sure. Well, if you're planning to manage your lawsuit or build a legal AI company, get on Linear. Linear is a purpose-built tool for planning and building products. Meet the system for modern software development, streamline issues, projects, and product roadmaps.
Good transition, not great. We're not recommending you use Linear to manage your lawsuit, but if you are building
use it for everything.
Product, yeah, John's very in favor of using Linear for everything, including workouts.
Haven't you seen those people that do art in Excel?
Yeah.
Then they zoom the grid way out. And they color each cell is a pixel.
Linear really is a
pixel
canvas.
Art. I think it should be. Anyway, let's go back to McKinsey. Companies pay dearly for McKinsey's human expertise, and for nearly a century they have had good reason. The elite firm's armies of consultants have helped generations of CEOs navigate the thorniest of challenges, synthesizing complex information and mapping out what to do next. Now, McKinsey is trying to steer through its own existential transformation. Artificial intelligence can increasingly do the work done by the firm's highly paid consultants, often within minutes. That reality is pushing the firm to rewire its business. AI is now a topic of conversation at every meeting of McKinsey's boards. Their board of directors. The firm's global managing partner has said this. The Bob Sternfels, I wonder the nominative determinism there. Do you think he's a very stern individual, or do you think he's really friendly and fluffy? We should get him on the show and just chop it up with him, just throw him tons and tons of jokes.
I don't need to have him on the show to know.
No, he's stern. It's just like, you guys should be doing so much better. You should be more serious. Just immediately stern mogs us. The technology is changing the ways McKinsey works with clients, how it hires, and even what projects to take on. And McKinsey is rapidly deploying thousands of AI agents. Those bots now assist consultants in building PowerPoint decks, taking notes, and summing up interviews and research documents for clients. What do you think about building PowerPoint decks using purely AI?
We were talking about this morning.
Yep.
I think that AI can do a tremendous job making you a generic deck template or just market analysis and turning that into page by page kind of analysis that you could generate slides against. But I think just grounding it in something more specific, I think if you were just trying to build a pre-seed or seed or Series A or Series B, really any type of fundraising materials that are, or even like like a deck for a venture fund raise, it's going to produce something that will not have you looked at very seriously. It will put together something that maybe like the most basic McKinsey associate would put together in terms of like, these are all the different types of slides you can have, and here's data and here's research that support these things. But the best decks take you on a journey. And my framework for making decks is, you basically want, in a fundraising context, you want every single slide to have like a very short sentence that takes that's walking somebody down this path that you're taking them on, where they just agree. So they get to the end, and if at any point in that deck they've read a headline and they're like, I don't agree with that, or that's dumb, you're screwed. But usually, if you've thought through your business,
I'm confused, or I'm bored.
Or you're confused, If you're bored or confused, it doesn't work.
That's C tier. But B tier is disagree.
But decks just get looked at. It's not about like the supporting content. It's about like the high level like narrative arc through the deck, and getting somebody to click through enough times, through enough pages to actually care about what you're doing. And I think that maybe there's some like really incredible prompting that you could do to try to come up with something like that, but I haven't been able to.
I just think the models aren't there yet in terms of like putting disparate information together, coming up with novel insights, contrarian thinking, independent thinking. All of that stuff is where the models fall down, but that's fine because they're fantastic at a bunch of other stuff, and anything that they can RL on is fantastic. And so I would think about it like, we already did the Figma ad read, but we're going to wind up doing another one. But I mean, they have a tool for building decks, and obviously you've built decks in Figma for years. And when I think about as that tool becomes more AI native, I don't necessarily want it to try and one-shot a prompt from build me a deck that convinces you that TBPN is a growing media company or something like that. I want a prompt to be like, go through and make sure all the text is centered. And then it just clicks through every deck and does the grunt work of centering every piece of text. Or there's so many times
you put all the content in and you say, generate other variations of this slide.
Or make sure all the black font is actually the correct color of black because I've updated that, like the style guide. And then pull in this data and then keep the data up to date. Like all the grunt work that happens, that should be the domain of AI. And for a long time, that's been the domain of the low-level management consultant, the person who is at a wedding and has to leave because their boss told them, hey, you got to update slide 7. There's a missed comma in this deck and I'm about to go present and it needs to be flawless. And so McKinsey is continuing saying they've reduced the headcount from 45,000 people in 2023 to 40,000 through layoffs and attrition, in part to correct from an aggressive pandemic hiring spree. It's also rolled out roughly 12,000 AI agents, which is a very, that's not apples to apples at all. You cannot just.
It's also funny to be thinking about the whole point of agents, or that anybody in a team can spin them up and get value and shut them down. And they're not necessarily perpetually running. So just to come out and be like, we have 12,000 agents on our team right now.
It's like how many?
We rolled out 12,000. It's like, okay, what?
How many Google Chrome tabs do you have open? Tell me that too, because that's useful. Like yesterday, I used agent mode to do some like really deep research, and then I wound up, and then it like was kind of working. It had this cool interaction where it asked me a question, and I just wasn't online for that, and it just typed for me continue, and then it just kept going, and so it wound up putting together a really, really thorough result, but it took a long time. But in the meantime,
it was agent? Are you sure it wasn't a ghost in the machine?
It was a ghost in the machine. But it was weird that it was like typing for me, but it was actually a great UX because I would have forgotten about it. But then I just went to 4.0 like in the interim and got like basically the same answer because like I didn't ask that complex of a question. And so I kind of like overestimated. I was like, I need the nuclear bomb for this one. This is the most brilliant question you could possibly ask. And it was like something that like probably Googleable.
I think the thing with management consulting is that this question has come up forever is the value of hiring McKinsey actually the strategy that you get or the advice that you get, or is it outsourcing like critical decision making or backing up critical decision making so that the management can say, like,
I don't want to do the layoffs, but McKinsey told me I had to.
Yeah.
Yep. It's a lot of cover and
or I didn't want to go into the cloud, but McKinsey.
Yeah. It's a lot of defensibility. It's a lot of like internal office politics, it feels like. But I do think that I think that narrative is a little bit overblown. And I do think some of the top McKinsey folks are actually great at business strategy. It's just that when you think of McKinsey, you think of kind of the mid-tier junior associate who's still just kind of learning. And of course, you're not going to get that much out of that person. So my question for this, so the key quote in here is that Katie Smage, a senior partner that Sternfels tapped to lead McKinsey's AI efforts early this year, said, "Do I think that this is existential for our profession? Yes, I do. I think it's an existential good for us." But of course that read as they think it's an existential threat, potentially, if they don't get it right. And so consulting is emerging as an early and high profile test case for how dramatically an industry must shift to stay relevant in the AI era. McKinsey, like its rivals, grew by hiring professionals from top universities, throwing them at projects for clients, and then billing companies based in part on the scope and duration of the products. So my analysis of this was that, okay, so clearly McKinsey is going to change. The question is, like, in the medium term, like pre-super intelligence, like how does it change? And what's interesting is that, like, when you look at the hordes of like 80-hour weeks from junior analysts on a McKinsey team, like the typical like Harvard, Yale, Stanford, Ivy League grad, doesn't exactly know what to do, maybe goes into the big three, Bain, BCG, McKinsey, as just kind of a junior consultant, and then after like 2 years, it's like go get your MBA and then maybe come back or do something else. Those 80-hour weeks, like what they are doing during that time, there's a lot of hurry up and wait, but there is a lot of actually hard work, pulling data, doing deep research, doing stuff that can be done by AI. But it also serves as basically like an extended interview. It serves as a benchmark for, is this person a grinder? Are they a creative thinker? Like, they have to do the baseline. They have to be very detail oriented. But then also it's a question of, while you're there, can you actually develop a relationship with a Fortune 500 CEO? And that happens. Like, I remember this crazy, crazy story of a woman who was this is a crazy story. So she was, I think I've told you this before. So she was at, I think, McKinsey, and she went to do some consulting in a Middle Eastern country, maybe like, what was it? It was something in, I don't want to be too offensive, but it's one of like the Borat countries. I think it was like Kazakhstan. Is that the one where he's from?
That's where Borat.
That's where Borat's from. So
the character.
The character's from Kazakhstan. So she goes to Kazakhstan.
Sacha Baron Cohen. That's where he went.
Yes. So she goes to Kazakhstan. And Kazakhstan has a number of state-owned assets. And one of the things they own, I believe, was a cigarette making facility. So they built a factory for making cigarettes for
a heater factory.
National tobacco.
We need to secure heater production. It's critical to national security.
Yeah, no. I mean, basically, like when you are a big tobacco company in America, everything is privatized except for like the roads here. Basically, we're like the most privatized country. But when you go to a foreign country and you're like, let's set up we'd love to set up business in your country. You have a bunch of hard workers who can work on this manufacturing project. The government just says like, okay, we will be the customer. Like we will be the service provider. We will be the counterparty to your request for certain services. We will provide those and we will own this, and that will be tax revenue for our government. And so that's what had happened years ago. This country had built up this cigarette manufacturing business. And then once you build up the business, the privatizing that can also be very lucrative because then you get all the cash up front. And so if you want to raise a bunch of money for your government and then maybe build some roads, one thing that you can do is you can sell the assets that you've developed. And so they brought in McKinsey to discuss how could they package this cigarette manufacturing building or factory or series of factories into an asset that could be sold to either a private equity firm or to big tobacco. So,
I see a large IPO on the horizon.
Basically, I mean, this is what happened with like Saudi Aramco was going to go public.
Where do you think Kazakhstan's nationalized cigarette infrastructure? What do you think it would trade at if it went out on?
Probably a pretty low multiple, honestly.
The very real meme stock potential there.
Yeah. Can you imagine that? It'd be crazy. Anyway, so they bring in McKinsey, and this woman's on the team. And she does the whole analysis and says that like, okay, if you package it up this way, you could get this multiple, you could sell this, and then that would bring in this amount of cash that you could go and use, and you could reinvest in roads, infrastructure. You could build an airport, data centers. Yeah, you could build anything, right? It's just
Foundation model lab.
This is pre all that. This is maybe like 2005 or 2010. So she does the deal. It's massively successful. Comes back, applies to Harvard Business School. And she needs a letter of recommendation. So she goes to like the prime minister of Kazakhstan and is like, hey, I helped you with that deal. I helped you privatize your cigarette factory. Can you write me a letter of recommendation? And I had the chance to read this letter of recommendation. And it was one of the funniest things I've ever read because it presupposes, it was a glowing endorsement. It was like, wow, she was incredible. She helped us with this deal.
Does it
we
just
made a ton of money.
that she's getting in?
No, it doesn't assume that she's getting in, but it is worded in the craziest way possible. It basically presupposes that it was unthinkable that a woman could do this. And
no way.
Huge cultural bias because, it's like a developing nation. And so this country, this prime minister is like, I was very surprised when she joined the team because I'd never worked with a woman before.
That's insane.
And I didn't
2005?
Yeah, no. And I didn't think that she would.
So Borat,
I don't want to say it was Kazakhstan because it could have been any other country in that area, but you can just think of it as generic
but
developing
Sacha Baron
nation.
Cohen was making jokes like that in Borat.
Exactly. And so I saw a real instantiation of like the joke that he was telling, basically. Yeah. And so the letter of recommendation to Harvard Business School, it starts with it was mind blowing that like a woman showed up to this meeting. I didn't think that was possible, and I didn't think that she would be like actually contributing, but then she was really helpful, and this like surprised me. And so like you should definitely let her into Harvard Business School. And then it ends on something that sounds like a vague threat. He's like, great sorrow will befall Cambridge if you don't let her in. No and it's like, and it was clearly meant to just be like you'd be making a mistake.
Missed opportunity.
You'd be a missed opportunity. But it was worded in this very like aggressive way that sounded like a threat. It was wild.
I mean, I guess anybody that's trying to get into HBS, get a prime minister of a foreign government to make a threat to the college.
and the funny thing is that you
could do that. You can do anything.
So you could read into it as like, okay, this country is developing. Like they clearly have different cultural norms. They're not the most like forward thinking in terms of women in the workplace. But instead of getting like dragged down in that, HBS clearly saw that like she basically went to a developing nation and like rizzed them like insanely and got a phenomenal deal done and made a ton of money for her firm and also for the country. And it was just this like win-win take private.
That's awesome.
And she got in and had a very successful career. That's just a funny story of what can go right with McKinsey. But it brings me back to the question of, there's a world where she would just be the PowerPoint person, and that's clearly not what she did with that opportunity. She went there and actually interacted with the prime minister and the top economic advisors to this developing country, and wound up driving a lot of value. And I'm sure there were other folks on the team on the client side, but she developed such a relationship that she was able to get this like silly but glowing recommendation letter. And so,
recommendation threat.
Recommendation threat. Yeah. Yeah, that's the real alpha. If you're don't write me a recommendation letter. Threaten the person that I'm applying the job for.
I would write a recommendation threat
for anyone on the team.
Tyler.
Anyone on the team, yeah, for sure. Great. Your next training run will fail unless you hire.
If you do not hire Tyler Cosgrove, you will effectively curse your bloodline.
I would happily put pen to paper to say that. Anyway. So the 80 hours a week, it's not just AI agent work. Like, you could not have an AI agent do what that example, like do what she did, fly to a developing nation and actually sit in the room with someone who was just on the cusp of learning what a take private was and the value that could be created, and convince them that this was a good idea. And so I think that these 80-hour weeks, they're gauntlets, and they're used to identify top performers that can still lead the firm. And the question is, if you don't have people doing the hard work, and you're not in like a lot of these things, we were talking to Danny Reimer at Index. We were like, is your model a mentorship business? And so even if you can like outsource to AI agents these low-level tasks, you still need to like build the next generation of talent in your firm and figure out who the top performers are. Now, maybe you can collapse that to an eval. Like, the reason that she got hired at McKinsey, I'm sure, was because she went to Harvard undergrad or something and had like perfect SAT scores and like a bunch of, and like all of that might be able to be distilled such that, you know, if you just ask Goldman or McKinsey to just say, take the top 10% of your class, don't hire the bottom 90%, and then immediately put them on the executive track, and they'll be your managing directors. Like, maybe it's all predictable, but you do have a lot of churn where some of your top performers are going to leave and start companies. Some of them are going to go to big tech. Some of them are going to just burn out and want to be like teachers or something random. They might want to change trajectories entirely. And so even your top performers aren't necessarily going to matriculate into the partnership leadership. Like, leading the firm is a separate thing from just pure quality.
It'll be interesting to see, like, if there's new archetypes of people that thrive in management consulting, right? Because like the right person that thrives in the first, whatever it is, 5 years of just insane grunt work and just like toiling over documents and stuff like that. The person that thrives in that oftentimes clearly can like rise above it and excel in client side, firm wide kind of, running the firm itself, et cetera. But there's also probably other people that would never make it through the first 5 years, but would just absolutely crush, for the sort of the majority of the career.
And I think that does happen every once in a while. There are people that lateral from entrepreneurship or tech into a big three consulting firm at the top. So they're never the low-grade analysts grinding. They might have grinded somewhere else, though. Like pretty much everyone grinds at some point, and I think that's kind of the part of the takeaway of founder mode is that the founder has been grinding in the exact context. And so you talk about like Dylan Field working on WebGL in the trenches of Figma, and then that enables him to speak with a different level of authority when he's managing a massive company that's now public. And so there's a world where like the grind is relevant to what you wind up doing, but the big question is just like, there is a risk, like how do you identify these killers early on in the interview process? What does it mean for retention? And then the other question is like, today, if you leave McKinsey to build a new consulting firm, you might be able to take some of your top clients with you. Like, if they put you on the Coca-Cola account and you wound up being really, really impressive as an analyst, and you spent a lot of time with the CFO and the CMO or whatever, or COO or whatever you were working on, and you built that relationship, and they see you as a critical consultant, even though the managing director or the head was the one who closed the deal, they might be willing to take a shot on you if you leave and start your own firm. But then you still have to spin up all your own analysts to actually do all the work that you were doing before with your team. And so that takes time to hire and train. But in the future, if you leave, if you're really high performing and you leave and you can just be like, let me get an account on ChatGPT Pro or whatever, and then I effectively have 40 consultants on my team on day one.
12,000.
12,000, exactly. I would imagine that leaving to start your own firm and going like sort of solo and just leveraging just the relationships, just the ability to, just your innate ability, could be like extremely high leverage much earlier in your career.
Yeah.
And so, because you don't have to do the thing where like you leave and you say, I'm taking everybody with me. You can just leave and be like, I'm taking the AI agents with me because they live in Azure and I'm just spinning up new ones.
Yeah. Yeah. The real question will be, is there IP, like real IP to develop around the agents, or can you use ChatGPT out of the box to say, pretend like you're a McKinsey analyst and make me this, 20-page report. I need sections on this, and this.
Yep.
Use the entire internet as a data source, as well as these materials from the client.
Yep.
And give me this report, and then yeah.
Well, here's an idea for a consulting firm. Leave McKinsey, go to companies, tell them to implement Fin.ai, the #1 AI agent for customer service, #1 in performance benchmarks, #1 in competitive bake-offs, #1 ranking on G2. That's basically your hero slide. You just show them the website and you say, pay me $1 million and I'll help you implement it.
That's
just
right.
kidding. Of course, you can implement this yourself. You could start a free trial.
McKinsey is private.
Yes.
But Accenture is not.
Sure.
And they have traded down 35% in the past 6 months. Bookings are slowing.
That's
they had a
crazy
big government. They had. They were impacted by Doge moderately. But McKinsey does have the benefit of being private and being able to make hopefully some longer term decisions. The scale of Accenture is insane. Guess how many employees they have?
40,000.
Close.
Okay, how many do they have?
791,000.
What? 700,000? They're 20 times bigger than McKinsey? Wow, is that a real number?
There's more people that work at Accenture than the population of San Francisco.
Oh my God. Where do they hold their Christmas party?
I don't even, yeah.
I don't even know where 1 million people congregate. Like, is that like Mecca? They have to go to Mecca? Haven't you seen those like 1 million people praying in one area? I think that's where they have to go. Or
even
I've heard about these, like,
Coachella has a daily capacity of 125,000
They
people.
can't even do Coachella. Where can 1 million people? I mean, I guess there was the Million Man March, so they could march on Washington D.C. That's what they could do. They could take over all of D.C.
This is their new. They just do rotations and they basically do like a daily walking ultra marathon where they just walk through and they just completely shut down towns and they all wear the company merch.
They've probably never been in the same place. They've probably never had a Christmas party with everyone.
They should use Restream for their all hands.
We
need some real infrastructure there.
Anyway,
that is absolutely wild. How many?
If you're selling something, I have some consulting advice for you. This one's free. Get on numeralhq.com. Sales tax and autopilot. Spend less than 5 minutes per month on sales tax compliance. Go to numeralhq.com.
The team just erupted in applause.
We love it.
Numeral.
We love it.
What else we got, John?
We got Disney. My question is: AI a sustaining innovation for Disney, or is it a disruptive innovation? Where will Disney be in 10 years, in the medium term? Obviously, you're going to be able to generate a lot of AI slop. You might be able to infringe on their IP. They might get paid by Google VO. When you generate a Mickey Mouse AI slop edit, they might get a couple pennies, but will it be good or bad for them?
Children's, I could see them making a product that allows you to make a book or a story for your kid that actually, and they get some type of revenue.
They should get revenue, and I think that they will through the courts, especially because as like big companies like you're not it's not this crazy, oh, there's like a bunch of kids doing random things. Like they never had to go after the street artist on Venice Beach that would draw a picture of Mickey Mouse and sell it to you for $20. That was never material to their business. They had to go after Napster. They had to go after Spotify.
I went to Venice Beach.
Yes.
I got them to draw me as Mickey Mouse.
Really?
And then I performed a citizen's arrest because I respect IP. I'm an IP respecter.
Yes. Citizens arrest is underrated.
Citizens arrest.
Citizens arrest. You're going to jail, buddy.
This is for Bob.
This is for Bob Iger. Yeah. So big question. This feels like a moment where you want to be in founder mode. Bob Iger is one of the greatest CEOs of all time. How will he navigate this? The Wall Street Journal says, is it still? He's not the founder. The founder died in 1966, Walt Disney.
But you're claiming
he
that
died,
he's still.
He might be able to turn it on. Satya Nadella certainly was able to do it. He's navigating the AI shift flawlessly. We'll see what happens with Bob Iger and Disney. Wall Street Journal says, is it still Disney magic if it's AI? The stakes are especially high for the studio, caught between how to use artificial intelligence in the filmmaking process and how to protect its famed characters against it. So there's a little anecdote that we'll kick it off with. When Disney began working on its new live-action version of its hit cartoon Moana, executives started to ponder whether they should clone its star Dwayne Johnson. The actor was reprising his role in the movie as Maui, a barrel-chested demigod. Have you seen Moana? No, you have not. Of course, we know this. For certain days on set, Disney had a plan in place that wouldn't require Johnson to be there at all. Under the plan they devised, Johnson's similarly buff cousin, Tanoa Reed, who is 6'3", 250 pounds, would fill in as a body double for a small number of shots. Disney would work with AI company Metaphysic to create deepfakes of Johnson's face that would be layered on top of Reed's performance in the footage, a digital twin, essentially, digital double that effectively allowed Johnson to be in two places at once. Obviously,
Dwayne
that's better.
Calls up his cousin, you want a job? I need you to be me.
Yeah, hit the gym, buddy.
Yeah.
better be jacked.
Get on a cycle.
But yeah, I mean, these movie schedules are famously tight, 3 months in and out, crazy schedules, and then you move on to the next one. There's that famous Henry Cavill story where he filmed Superman, wrapped, moved on to another movie where he had to grow out a mustache. He grew out a mustache and a beard, and then they said, hey, we got to do some reshoots. You got to come back to Superman. And he came back, but he couldn't shave his mustache and beard, so they had to change it in CGI, and it looked terrible. Probably not a problem now with deepfakes. That's actually a good use of AI and something that probably shouldn't be very controversial, but obviously everything in AI is controversial right now. But we will continue with Disney. They say, what happened next was evidence that Hollywood's much discussed, much feared AI revolution won't be an overnight robot takeover. Johnson approved the plan, but the use of a new technology had Disney attorneys hammering out details over how it could be deployed, what security precautions would protect the data, and a host of other concerns. They worried that the studio ultimately couldn't claim ownership over every element in the film if AI generated parts were in there. So if there's AI training data from a DreamWorks film in there and they use the DreamWorks training data to make a Disney film, even if it looks like Dwayne "The Rock" Johnson, DreamWorks might come knocking and say, hey, give us a royalty. I think that's the risk. But the lawyers are having fun, maybe. Full employment for lawyers over at Disney, clearly. Disney and Metaphysics spent 18 months negotiating on and off over the terms of the contract to work on the digital double, but none of the footage will be in the final film when it's released next summer. They went and shot it. A deepfake Dwayne Johnson is just one part of a broader technological earthquake hitting Hollywood. Studios are scrambling to figure out how simultaneously they can use AI in the filmmaking process and how to protect themselves against it. Is it sustaining or disruptive or both? Can't be both, but we'll see. While executives see a future where the technology shaves tens of millions of dollars off a movie's budget, they are grappling with a present filled with legal uncertainty, fan backlash, and a wariness toward embracing tools that some in Silicon Valley view as their next century replacement. And if you are trying to sell an AI tool into Hollywood, you got to get on ADIO, Customer Relationship Magic. ADIO is the AI native CRM that builds, scales, and grows your company to the next level, and you can get started for free. So the Academy of Motion Picture Arts and Sciences is surveying members on how they use the technology. Studio chiefs are shutting down efforts to experiment for fear of angering show business unions on the eve of another contract negotiation, and no studio stands to gain or lose more in the outcome than Disney, the home of Donald Duck, Belle, Buzz Lightyear, Stitch, and countless others, which has churned out some of the most valuable and protected creative works over the past century. So my take on this. So 2 years ago, I was hanging out with the founder of a very large generative AI image generation company. And he was telling me that by 2025, anyone with a laptop and an internet connection could generate a full Hollywood movie about anything they want with a single prompt. And it was a hilarious conversation because we were on a Zoom call and his internet wasn't working. And it was the classic example of like, the technology is amazing, but we got a lot of stuff to iron out. So anyway, extremely aggressive timeline, but obviously things are going to change for Hollywood. So my question is, will Disney benefit? It feels like a moment to be in founder mode, but Walt Disney died in 1966. So basically everyone believes that Meta will benefit from AI, even if they miss the train on owning the next dominant consumer tech platform. But if Disney got really AI pilled, what would that look like? I don't think they need to train their own foundation model, just like they don't need to build their own cinema cameras. Yep. They can just use IMAX when the time calls for IMAX. They can use Blender when the time calls for Blender. They can use Houdini when the time calls for when the shot calls for some high level VFX. Yeah. But they do need to rethink how they structure their business and negotiate with unions and underwrite content. They might need to go more risk on, not just from a brand risk position, but taking more smaller bets. We're in this weird barbell world where everything seems like it's either $100 and it's shot on an iPhone, it's a viral like TikTok, or it's $100 million blockbuster with like $50 million of VFX. Actually, that's kind of a low number. It's usually like $300 million production with $150 million VFX, and then no one sees it and it's a flop. But then they hit every once in a while and they're great when they're good. But it's this weird like venture style betting at the high end. But there's nothing in the middle, and maybe that's like the death of the art house film. But I'm just wondering if in the age of AI, like maybe there's this interim step where Disney ladders down a little bit and gives like 10 filmmakers $10 million each and says, hey, you're still required to deliver a 90-minute full film, but you're doing it for 10 mil, and it's not quite Blair Witch level production, one notch up. You got to be creative. This is what A24 is doing.
I'm really bullish on this idea that historically, like a TV show would film a pilot episode and they would use that to get the budget to shoot an entire season. And you can imagine now, you could, even for film, you can just make the trailer ahead of time with AI. The other advantage that I think Disney has that's very real, just going in and why they're just broadly seem to be positioned very well here, is that I think that broadly, like, content customization will probably take off, because Disney can make a film now, and then you could make millions of different variations of it that become interactive with like the underlying fan. So like imagine you're watching Moana, but like your kid is in the film, is a character in the film, and you can now do that at scale, right? Yeah. And how much more would you pay as a parent to have something like that?
I have a funny story about this.
But last thing I'd say, so customization and just like democratizing, like basically being able to make variations of films, I think is going to be big. I think just the time, it's the same way it's so difficult to make a new luxury brand. It's so difficult to create. It's easy to create IP. It's hard, extremely difficult and time intensive to create valuable IP. And Disney's advantage is they have this sort of like 360, in that they can make a film and they can bring it to Disneyland, they can bring it to a cruise, they can create physical products around it. And so they develop IP in a way that new entrants are not, they don't have the benefit of like having a Disneyland where they can make new experiences that increase the value of that IP, right? So I think...
So two things. One, if I were to go back, one of my favorite Disney properties is Star Wars, A New Hope, the very first film. If I went back and was like, let's customize that for me, I don't know that I would make any changes. Like, do I really want a scene where Han Solo breaks the fourth wall and says like, hey, John, like I'm about to go, save Luke at the Death Star? Like, that doesn't improve the product for me. I actually like that it's just the vision of George Lucas. So I don't know about customization being better for me. I don't know what I would change.
But here's an example of how to make like a magical experience for a kid. It's like, imagine after a movie ends. a kid could interact with a character and ask it questions in real time, like about the story, or
That's
have
cool.
a conversation with them. And that's what I'm talking about, like bringing that IP to life.
Totally. Right now that exists. And I was obsessed with this when I was a kid. I would watch Star Wars, and then I would read the books in the expanded universe. And I remember even having books that were just like encyclopedias of every single ship. This you could read into this a little bit more, but we'll leave that where it is. But I would learn every single ship. This is what a Star Destroyer does, and it would have all this backlog and stuff. And so, yes, I agree with you. That's very cool. You finish the movie, and then you can just interview Luke about how does the lightsaber actually work, and he can talk about the kyber crystals. That would be very cool. On the flip side, I had a very funny experience. I was watching a horror film in high school with a couple friends, and I grew up in Pasadena. And this horror film just happened to take place in Pasadena. Like, that's where they set the film, because Pasadena, California is just like a place where you set films. It's just a real place. So if you've seen Kill Bill, which I know you haven't, but Kill Bill by Quentin Tarantino, there's a scene where Uma Thurman just shows up, and it says at the bottom, Pasadena, California, because like that's where the character went. It exists in the real world. But this horror film that took place in Pasadena was terrifying, because I was watching it and I was like, this is happening here, and it's night and it's dark outside, and like now I'm so much more immersed. And so I was thinking back then that you could use like the IP address of a connected, I think we were watching it on like a PS3, like a DVD player. Like you could use the DVD player to dynamically change the location of the establishing shot. So you're like, this whole horror film is going to take place inside of like one house where there's like a monster in the house, and it's going to be like the usual, like they're upstairs, they're downstairs, there's blood, there's someone's running and chasing. Like it could be any town USA, but they usually establishes like this is happening in Amityville, this is happening in some random town, Lake Placid, right? But they could easily just dynamically change that with a few establishing shots to just show you, okay, it's happening in Malibu, right? And now it's a lot scarier for you. So I think there's something interesting there, but again, it has to be the work of like an auteur.
It's not something you can copy and paste either, because it works for some shows, but then others, like the place is so obviously the place that it would throw you off as a viewer.
Exactly. And so I do think that the fully AI generated, fully custom content, that will exist, but it will exist on independent third-party platforms. It won't be the domain of Disney. This will be something where if you, in the future, if you really want to see like, AI generated stories about surfing in Malibu, like there will be an endless stream of those, and you will be able to go and experience that particular content. And you can already kind of experience that because there's probably some Instagram person who makes really great content about surfing in Malibu. And if you follow them, you get that vibe, and that might be what you're into. And you can kind of like, and it's handled just by the great democratization of creativity. Yeah. And we should talk to Samir about this later. He's coming on the show. So we can talk about the future of content creation and whatnot. But anyway. Let's talk about public.com. Investing for those that take it seriously. They got multi-asset investing, industry-leading yields, and they're trusted by millions. Go check it out. Anyway, let's hit the timeline. Let's go through the hottest posts on the internet.
The moment you've all been waiting for.
Last Friday, after we wrapped the show, it was a timeline in turmoil over in D.C. I believe the head of the Bureau of Labor Statistics was fired. This was after a negative job report. It was very controversial. People were not very happy about this because this is the data that we use to judge the health of the economy.
Insane whiplash too, because big tech, Thursday, printing, Figma,
massive gain.
Biggest gain in a very long time. Yep. And then it turns out the real economy, or at least the statistics coming out of the Bureau of Labor Statistics, were not looking great. And the prior 2 months
got revised down. And so we are still adding jobs, but mostly in healthcare. And
over at Accenture.
Yeah.
Although I think they're cutting as well.
Yeah, and so broadly, the U.S. economy feels strong, but we are having some unemployment upticks, and so that's always a canary in the coal mine. But Ray Dalio chimes in with his take.
Also, I believe like tourism is down pretty much across the board.
Yeah, and there's a lot of debates
so
about
a bunch of
people immediately were digging into what's driving the job losses. Does it have anything to do with Trump's immigration policy? There were a lot of different ideas as to why the job numbers are what they are and how bad are they. Obviously, you can see in the market tanked on Friday, but then is up today, and so there's there's not necessarily consensus now that we're like entering a recession or anything like that. But it's certainly something to watch and something to dig into. And obviously, we want high quality data about everything from GDP to CPI to unemployment. And so Ray Dalio is breaking down his argument for firing the head of the Bureau of Labor Statistics. He says that's because its process for making estimates is obviously obsolete and error prone. And if there's no good plan in the works, for fixing it. The huge revisions in Friday's unemployment numbers are symptomatic of this, especially because the revisions brought the numbers toward private estimates that were in fact much better. I assure you that this is something that I know a lot about because of how I use data to follow the economy and bet on where it's going. Of course, if the way most people in the media are conveying President Trump's motivation for the firing is correct, such as the New York Times saying, quote, when President Trump didn't like the weak jobs numbers that were released on Friday, he fired the person responsible for producing them. That would be a big problem because leaders manipulating numbers that distort the truth to suit their political objectives is a classic sign of the loss of a functioning system with the rule of law and checks and balance. And the loss of these things leads to the loss of confidence that underpins our whole economic and political system. So it'd be good if President Trump made his thinking clear. In any case, we do need big renovations to the ways the government estimates what's going on in the economy to make them more, not less accurate. And so this is interesting because Ray Dalio is not a perma bull on America by any stretch of the imagination.
Yeah.
He literally wrote a book about the changing world order that was basically like, America's cooked. I mean, to some extent, he was like talking about the rise and fall of nations, and he's been very bullish on China and sees China as a rising nation. So he is not someone that is just constantly ringing the gong for America's unrelenting progress. And so this is an interesting take from him. And then. I mean, I have personal experience with how the government collects data. I didn't work at the Bureau of Labor Statistics, but I worked at the Census Department.
From the
college.
People that brought you the Department of Motor Vehicles comes labor statistics.
Exactly, and so I always in the year 2000, the economy was ripping, and I believe the census was done by volunteers because it wasn't. It was just kind of like, oh, let's get a poll of people. But then in 2010, the economy was in a recession after the great global financial crisis, and it was seen as a stimulus program. So people were making like $20 to $25 an hour, which is very good back then to go around and survey people. But the survey data is a little messy, and I was always wondering.
Have you told this story on the show before?
I don't think we have time today, but we should at some point. But basically, my takeaway was always like, couldn't we just ask Google? Like, I have a feeling that the big tech companies know not just exactly how many Americans are in each jurisdiction, but they know everything about them, their IP addresses and their geolocations. Like, the big tech companies truly know so much. And I know you're going to say like, well, not everyone uses Facebook, and that's true. But if you aggregated data across like most of the cell networks and most of the web services, like, you could get a very accurate reading, much more so than just randomly going door to door and seeing like, oh, this person opened the door and talked to me, which is like how the census currently works. And so it is interesting that the unemployment numbers the government numbers were less accurate than the private estimates, which are just like, because obviously every hedge fund wants the data, and they want the data earlier than the government puts it out. And some traders obviously trade on top of the BLS statistics, and those are important, but the private estimates are better. And so interesting to see where this goes, how much modernization can be done, how much, and then there's always the question of like privacy if you're like tracking everyone, because it's like there's a lot of people out there who might say, well, I don't want the government to know if I have a job or 2 jobs.
Of big data, Palantir announcing earnings, I guess I'm assuming in 30 minutes. Another post here from Bucco Capital Bloke.
Yeah.
He says, Trump, we need to cut. BLS. Turns out the job market is weak. Trump. No, not like that. Another post, interesting data point here. Derek Thompson says spending on services, especially travel and tourism, has declined for 3 straight months for the first time since 2008. Expanding when Trump, the U.S. economy is showing strains of weakness. Outside of the pandemic, the employment rate for college graduates over 25 is rising fast and is higher now than any year since 2014. Job growth in the past 3 months is the lowest since 2010, and spending on services has declined for 3 straight months for the first time since 2008. How are companies, individuals, and the government supposed to deal with an economy slipping toward recession if we're smashing the tools we need to know how fast we're falling? In a tempest, it's unwise to ransack the navigation system. That is Derek Thompson's take. What else we got?
We got 8sleep.com. Get a Pod 5. They have a 5-year warranty, 30-night risk-free trial, free returns, free shipping. Continue, Jordy.
It was absolutely brutal having to cover the Figma IPO without sleeping on an 8 sleep the night before.
Brutal.
And Ramp Series E2. You know, these are big days.
Yeah. But green shoots for us.
Yeah.
Code
TBPN, of course, if you want to make the switch.
Yes.
Benji Taylor says people are finally starting to realize how few truly great designers there are and how disproportionately valuable they are.
Yep.
If you missed our interview with Dylan on Thursday, he said that design is becoming an enduring edge for companies. We've seen this with companies like Linear, which came into a crowded category and is dominated by just building a truly thoughtful product.
Yeah,
and this is something
people love to reduce design to nothing. Oh, Cursor, Windsurf, these are just forks of VS Code, and it's like, yes, but like if it was truly perfectly competitive, why is there a split in revenue at all? Why isn't it just 50-50? Well, like there's probably some design and differentiation in the product that you don't realize until you're actually a DAU of these, and that is what's driving the adoption.
Yeah, but I have worked with hundreds of designers across my career, and there's only a handful that when people come to me and say, I want to recruit a founding designer or something like that.
Jacoby
in the comment section.
Oh, he's there?
No. He's in the comment of Benji's post. Anyways,
if you're looking to design something, design a billboard, put it on adquick.com. Out-of-home advertising made easy and measurable. Say goodbye to the headaches of out-of-home advertising. Only AdQuick combines technology, out-of-home expertise, and data to enable efficient, seamless ad buying across the globe.
We didn't make it to our billboards in New York.
We didn't.
But I felt like I'd been there because so
many people had posted
had
it.
Shared them.
Had
shared them.
Still low-hanging fruit in billboards.
Anjane says Mistral, 11 Labs, Black Forest Labs, Lovable, Helsing, Granola, European AI scene is on fire. So I just wanted to give some
like
credit.
This top comment, not to mention Lovable, and then Anj just says reread the list like it's literally the 4th one. That's very funny. Anyway,
and I know all these companies.
This is bait though. This is bait for us.
It's
because I refuse to step foot on the old continent. And so by posting something like this is trying to get me out of golden retriever mode, out of being nice. This is trying to bait a dunk from me because nothing makes me more upset than anything that's not America.
Well, one thing I would say, I think you can be happy that the cap tables of these companies are majority U.S. venture capitalists. Yes,
I'd like the cap tables to get 100% American owned, and then I'd like the companies to relocate to America.
What about the teams?
Everyone and all the customers.
Just
move everyone to America.
11 Labs
Unicorns
is also 11 Labs
guarantee citizenship.
From my understanding,
is primarily based in New York.
Little truth zone going on.
But I think
Anjane
would know better, considering Andreessen is an investor.
Yeah.
Rune says,
this is funny.
It's true what the misinformation is saying about us. We indeed have Lilith, progenitor of human life, locked up under the Mission Bay headquarters.
Don't read the comments on this one.
We're skipping over the comments.
Very funny. But anyway, there was a GPT-5 article that went out, and this is Rune kind of putting it in the truth zone and saying, like, hey, we're just grinding and we're building and, tell your story a different way, basically.
Bayes Lord says, I propose we create the Terence Tao Institute for Math and Science and fund it with tech money. Terence Tao got his funding at UCLA
Didn't like this.
cut, not specifically, but funding was cut broadly due to UCLA's reaction to.
Yeah, he was sort of collateral damage.
Yeah.
In a political fight between UCLA and the current administration. And so I think someone should step up and keep funding him. I think there's certainly value in having him do extremely undirected research. He could land at a lab and do cool stuff. And
I was saying that
he
should join Vlad's
that would be very cool. Yeah. So Vlad Tenev, founder of Robinhood, has a new foundation model company or AI lab focused on math. And he's got the money to provide Terence Tao with everything he needs and more. And I think this would be a great use. And if it doesn't happen soon, we're going to start negging every billionaire into doing it. We're going to create the shame on you list for billionaires who have not donated to Terence Tao. But
Noah
I think
Smith
it'll be taken care of.
Says we now have a big story about why this time is different. Rapidly increasing debt funding one single sector, an opaque corner of the financial system that has recently grown, systemically important lenders enmeshed in the new sector. And I just want to say, I feel
like calling top signals was like a 2 weeks ago thing. I think we're back at this point. And I don't know why he's calling top on everything right now.
I just hope that this time the music never stops.
Me too.
Because I
like playing
dancing,
musical chairs. Yeah.
And who doesn't like a little game of musical chairs?
But also, I mean, maybe this time there's enough chairs. Everyone just takes a seat.
No one said if you're playing musical chairs, you have to stop the music.
Also, in musical chairs, you could still land on a chair. There's only one person gets eliminated. So just don't be that person. Don't
be that guy, pal.
Yeah, don't put yourself in the FTX bucket.
Do we have time to go through this?
We have 10 minutes.
Okay.
But I think there's probably more stuff.
Noah Smith on No Opinion. Will data centers crash the economy? This time, let's think about a financial crisis before it happens. The U.S. economic data for the last few months is looking decidedly meh. The latest employment numbers were so bad that Trump actually fired the head of Bureau of Labor Statistics.
We don't know that that's why, but it's a reasonable take.
Accusing her, his take would be, she's been messing up the numbers a lot and we need a new approach, kind of.
Yeah, but
accusing her of manipulating the numbers to make him look bad. But there's one huge bright spot amid the gloom, an incredible AI data building. Boom.
Let's go.
Look
at the chart. Pull up the chart, scroll down. Capital expenditures quarterly. We're so close to touching 100 billion across Meta, Google, Microsoft, and Amazon. You add in the independent CapEx that's going on, and you're easily in 100 billion a quarter. You'll love to see it. A little disappointing Q1, but Q2 we came back strong. Yep. Yeah, no one's really talking about the sell-off in Q1.
Noah says inference compute now represents most of the cost of running advanced AI models and increases in inference compute are responsible for many of the ongoing performance gains. So compute needs are probably only going to grow as AI keeps getting better. Whoever provides this compute is going to make a huge amount of revenue. Whether that means they'll make a lot of profit is another question, but let's table that for right now. We reported earlier that Microsoft's margin on the token and inferencing side was something like 30 to 40%.
I would just zoom out and look at it as like, what's CapEx? We're talking about 100 billion a quarter. What's token related revenue? So add OpenAI, they're making 3 billion a quarter. Anthropic's making $1 billion a quarter. Obviously there's, core AI stuff happening at all the hyperscalers, but you add all that up, we're making like maybe 10 billion a quarter in revenue right now on AI stuff, and we're investing 100 billion. And so like we're not right side up on the trade generally, but there's no sign that ChatGPT will ever make less than $1 billion a month. Like there's just no sign that that's going to fall off a cliff.
Yeah.
Who's unsubscribing?
It's the same dynamic, right? If you build a factory, do you expect to generate profit that month, that quarter, that year, the next year? Potentially no.
I mean, this stuff depreciates like quickly because it doesn't stay on the frontier, but like the base workload for just generating tokens for GPT-4o, like reasonable questions and just asking
super intelligence,
just basic stuff, like that workload could stay on those H100s for a decade and you could make that money back.
Yeah, it is interesting that Apple, we covered after their earnings, Tim Cook called out that they're using third-party like lenders to finance a lot of their CapEx, and they're choosing not to deploy too much capital themselves. So Noah says, roughly speaking, Apple is choosing the former, while the big software companies, Google, Meta, Microsoft, and Amazon are choosing the latter. These spending numbers are pretty incredible. We covered this chart already. For Microsoft and Meta, this capital expenditure is now more than a third of their total sales.
Let's go. If you're looking to deploy a capital expenditure of your own, get on Bezel. GetBezel.com. Your Bezel concierge is available now to source you any watch on the planet. Seriously, any watch. It goes on the balance sheet. It's CapEx. It's personal CapEx. Do it.
Here's Chris Mims of the Wall Street Journal. Mag 7 tech firms have collectively spent a record $102.5 billion on CapEx in their most recent quarters, nearly all from Meta, Alphabet, Microsoft, and Amazon. Apple, Nvidia, and Tesla together contributed a mere $6.7 billion. Investor and tech pundit Paul Kedrowski says that as a percentage of gross domestic product, spending on AI infrastructure has already exceeded spending on telecom and internet infrastructure from the dot-com boom, and it's still growing. He also argues that one explanation for the U.S. economy's ongoing strength, despite tariffs, is that spending on IT infrastructure is so big that it's acting as a sort of private sector stimulus program. CapEx spending for AI contributed more to growth in the U.S. economy in the past 2 quarters than all of consumer spending, says Neil Duda, head of economic research at Renaissance Macro Research, citing data from the Bureau of Economic Analysis. Here's that chart from Kedrowski, who has been doing an excellent job following this story as it unfolds. So we can pull this up right now. Infrastructure CapEx as a percentage of U.S. GDP by era, and you could see railroads. We went pretty
What's
hard.
Weird is that he's showing telecom CapEx in 2020 when that was not like the boom time for telecom. Obviously 5G and fiber infrastructure are being built out, but this doesn't surprise me. We got to get this number up. We got to get to 6% of GDP for sure. 50% of 100% of GDP.
Dorkesh talked about this.
Yes. If you play out the scale is all you need thing, you wind up investing like 200% of global GDP eventually, and it's just like the math doesn't
Masa is like, I can come up with the money. I'm good for it. I'm good for it.
I mean, technically you could invest more than 100% of global GDP with enough debt. Like you can, or you could just save up for a decade. Like humanity could save up and then just deploy it all at once. Like wealth is not the same as GDP. GDP is an income figure, and wealth is a balance sheet figure, and CapEx is a deployment from the balance sheet essentially.
Not income.
Yeah, I mean loosely, you should benchmark GDP to revenue or something like that. More than just like GDP. Like the U.S.'s GDP is not how much money the U.S. has right now or can spend. It's just how much money is flowing through the economy.
Yeah.
Anyway.
Noah says, I think it's important to look at the telecom boom of the 1990s rather than the one in the 2010s because the former led to a gigantic crash. The railroad boom led to a gigantic crash too in 1873 before the investment peak on Kedrowski's chart. In both cases, companies built too much infrastructure, outrunning growth and demand for that infrastructure, and suffered a devastating bust as expectations reset and loans couldn't be paid back. And doesn't Tyler Cowen also have a bunch of writing on why these sort of booms and bubbles are actually can have a tremendously
Tyler Cowen has written about it, but I think you're thinking of Bern Hobart, who wrote the book Boom for Stripe Press. Fantastic book. You should go check it out. But basically, it's just that you do get these gyrations, these market corrections, but the booms create new opportunity at lower prices because you have all this dark fiber. Who bought up that dark fiber? Google. And so we got Google post-crash. Actually. And we got Facebook post-crash because the infrastructure was there and the railroads had been built. And you can see the same thing happening where there's a whole bunch of inference capacity that's out there. And then it's like, we're really not using it all because we're kind of good with GPT-4 class models. And we don't need to inference at the 4.5 level on those monster models because it's kind of not worth it.
I'm good with my McKinsey analyst
I'm good with this one. But then in the next 10 years, while we're kind of licking our wounds from the sell-off, somebody goes and figures out how to actually use that crazy higher amount of inference, and the capacity is there, which is very cool. But anyway, so if you're looking to take a vacation and go visit a data center, you got to book a wander, so you're sleeping in luxury while you're going out to the data center.
That's
right. You can find your happy place. You can book a wander with inspiring views, hotel-grade amenities, dreamy beds, top-tier cleaning, and 24/7 concierge service. It's a vacation home, but better. Yes, that are closest to the data center.
To the big data center, if you want to do some data center tourism.
Sort of like a
pilgrimage. So Noah says, in the context of the telecom boom and the railroad boom, in both cases, the big CapEx spenders weren't wrong. They were just early. Eventually, we ended up using all of those railroads and all those telecom fibers and much more. This has led a lot of people to speculate the big investment bubbles might actually be beneficial to the economy, since manias leave behind a surplus of cheap infrastructure that can be used to power future technological advances and new business models. But for anyone who gets caught up in the crash, the future benefits to society are of a cold comfort. So a lot of people are worrying that there's going to be a crash in the AI data center industry and thus in big tech in general, if AI industry revenue doesn't grow fast enough to keep up with the CapEx boom over the next few years. A data center bust would mean that big tech shareholders would lose a lot of money. Like .com shareholders, you're not losing if you never sell. Like .com shareholders in 2000, it would also slow the economy directly because big tech companies would stop investing. But the scariest possibility is that it would cause a financial crisis. Financial crises tend to involve bank debt. When a financial bubble and crash is mostly a fall in the value of stocks and bonds, everyone takes losses and then just sort of walks away a bit poorer, like in 2000. Jorda, Schulerick, and Taylor survey the history of bubbles and crashes, and they find that debt, also called credit and leverage, is a key predictor of whether a bubble ends up hurting the real economy.
So I think we need to dig into this more. We need to learn more about private credit, have some folks on who are financing this stuff, analysts who are covering
been a golden
these.
era of private
credit. It has
been.
And I think that there's another 3 hours of discussion here. But we have our next guest.
We had one of the founders of CoreWeave on.
Yeah.
We should ask him to introduce us to a couple of the lenders that kind of finance that business and ended up printing.
Yeah. I mean, just off the top of my head, I've been talking to a bunch of folks about this, and it's not quite the same because you can hold private credit for a much longer time, and there's a lot of this stuff is being funded off the balance sheets. They're just cutting a dividend or drawing down on a cash balance if you're a Mag 7 company. So there are a lot of differences, but definitely worth digging into. So we will cover this more in the coming days. But we have our first guest of the show, Dan from Armada. Welcome to the stream. How are you doing, Dan?
Hey guys, I'm doing great. How are you?
I'm good.
Welcome to the show.
Thanks so much for joining.
Thank you. Good to be with you.
Can you kick us off with an introduction on Armada and how you're explaining the business these days?
Yeah, so Armada is building the hyperscaler for the edge. Look at a map of the world, there's about 30% of the world where you have these big hyperscale data centers. And that means 70% of the world doesn't have AI infrastructure today. And so we are filling the gaps in infrastructure, building that hyperscaler for the edge.
Got it. How much of that is military versus, we hear about the oil and gas industry. They need a data center on site. They're in some remote location versus just energy price arbitrage. Let's go where the energy's cheap, put a data center there. Crusoe was doing that early on in a little bit less of a portable package. But how are you thinking about the market and kind of the most tangible opportunities that you can explain the business through?
Yeah, it's both. So we're working with critical industries, a lot of energy companies, oil and gas, mining, manufacturing, logistics. And then in the public sector, we're working with the DoD, as well as allies. And then also doing a lot with emergency response, anything that requires sort of split-second decision-making, processing of large amounts of data in more remote locations. That's a real focus for us. And then what we've seen is that now that the kind of blocker for AI is moving from just the chips to energy. Yeah. And I think Anthropic just came out with a white paper last week where they're talking about we need to unlock 50 gigawatts of energy by 2028 for AI. Yeah. And so we actually just launched a new product, which is called Leviathan, which is megawatt scale AI data centers that can rapidly co-locate with areas where there's stranded landed energy. And you can have a sort of a plug and play AI factory in weeks versus years with a traditional data center. And that's important because we've got about 6 gigawatts of stranded energy around the country. China's moving really fast. We need to unlock all that energy in order to win.
Yeah, walk me through kind of the shape and scale of the products. I've seen the shipping container.
I'm curious, what does stranded energy actually look like? I have a bunch of guesses. Infrastructure was overbuilt in a specific area.
Beached whales. If there's beached whales, you extract the whale oil right there, and then you can burn it and generate your power for your data center. No.
Just like that. No, I mean, there is a ton of stranded energy around the country, and then also, in allied parts of the world like the Middle East. If you looked at like the top energy sources, what's top of the list? It's natural gas, right? So you have a lot of stranded natural gas in places like, North Dakota, Texas. We're already working with developers that have a lot of that land and stranded energy, and they're looking to utilize it for AI infrastructure. And if you look at the AI action plan that just came out, I think part of what we're trying to do is say, okay, we have all this stranded energy. We're going to need hyperscale data centers, sort of gigawatt scale data centers. We need to build those really rapidly, but we're also going to need to build distributed infrastructure, distributed data centers that can be deployed very quickly to use that stranded power.
So when I hear stranded natural gas, does that mean like some exploration company has gone and done fracking experiments or research to understand that there's natural gas there, but maybe there's just no pipeline to extract it, so you can get it out of the ground, but it's very expensive to move somewhere else that's more valuable? Or is it something else that's going on? Like, how can natural gas be stranded, basically?
Yeah, that's definitely, some of the scenarios. Other scenarios are like there are major energy companies around the country that have sort of flare gas that's just being released today in the atmosphere. Sure. Yeah. And so they're under pressure to do something with that gas.
Yep.
And so what they're now doing is they're actually using turbines to convert it into electricity so that you can power infrastructure, some for their own internal use, but then also they're looking at this as, hey, I can create a new revenue stream. And so it's a mix of different situations, but those are common ones that we see.
Makes sense. Let's go back to the actual product, what it looks like. I've seen shipping container renderings. What are the different scales and products that you think are most important to push forward right now?
Yeah, so again, we're building the hyperscaler for the edge, and what's unique about us is we're doing it full stack. Mm-hmm. So we do the hardware, the software, and the AI. And the easiest mental model to have is like, think about one of the current cloud providers. Think about, Azure, AWS, GCP. What are they? They're really just full stack infrastructure companies. Mm-hmm. They focused on building these large hyperscale data centers in, areas that had a lot of data, major metro areas. But again, that's only 30% of the world. So basically what we're doing is focusing on the remaining 70%, but otherwise it's a similar type of approach. We're building full stack. We provide everything to customers as a service in a way that's totally turnkey. And I'd say that the biggest difference is that we see a world where it's going to be distributed compute. So we're building rapidly deployable mobile infrastructure that can be co-located with not only energy, but data. Because what we've found is that you've got, some of these energy companies that have oil rigs that are generating 1 to 5 terabytes of data every day. Similar situations with mining companies, similar situations on a battleship, right? Where you might have just huge amounts of data being generated from drones, autonomous technology in the middle of the ocean. Now you have connectivity via Starlink or Starshield and other types of connectivity, but you also need to compute there locally to do any sort of real-time data processing at the edge.
Are you seeing more demand for kind of like tokens as a service managed models, or just pure infrastructure, bare metal, let me do whatever I want on it?
It's all, so again, it kind of comes back to think about like the cloud provider. Like there's a reason why Amazon Web Services is called Amazon Web Services, right?
Yeah.
It's the services that the people care about. And so for us, we also sell services, or so we call them solutions, where it's like there's a specific thing that the customer is trying to do, whether it is, rapidly standing up an AI factory in some location where they have stranded energy, or it's a scenario where they have lots of unstructured data, let's say from drones, and they want to process all that data in real time versus having hours or sometimes, days of delay so that they can do a specific thing. A good example is we're working with the state of Alaska, their Department of Transportation, and they're using our entire platform. They're managing all of their connected assets, meaning like Starlink terminals, Skydio drones, SD-WAN devices. They used to have over a day of latency to process the unstructured data from the drones for response to avalanches in remote areas.
Wow.
And, we're helping them get to near real time to respond to those types of things. And so that's what we're seeing is there's different specific problems that these customers have at the edge. And then we're unique in that we actually solve them full stack.
Jordy?
I'm curious, how many sort of like systems do you want to have? Like, what are the sort of like more near-term goals in terms of deploying systems? When I think of the word Armada, obviously you think
many
of like the
ships,
fleet, fleet that's stretching as far as the eye can see.
I'm
Obviously,
seeing like
these
the
are
Tesla
spread all
power
over.
battery pack where I can figure like one and it's a couple grand, or I can spend $192 million or something if I buy a ton of them, but it's really just like a lattice. Yeah, so it's super interesting.
Yeah, and even like how you're managing kind of like how to prioritizing different customers, when I'm sure you get calls all day long and somebody's like, hey, I need a data center in Antarctica. And you're like, well, like we're more focused on, the northern hemisphere. Right
the IMO's next week. I need a data center
Yeah,
next.
exactly. No, we're exactly right. We're focusing on the largest sort of mission aligned entities in the world. And what I mean by that is we're working with some of the largest energy players in the world. We're working also with, the DoD, it's public. We're working with the US Navy. Yeah. It's kind of nice that the company's called Armada. It goes hand in hand with that. But the way that we approach it, we really focus on customers that we can see that they will have thousands of what we call connected assets. So, take the Navy, have a galleon. We call our modular data centers galleons, sticking with the Armada theme. Have one on every ship. Have one in strategic locations around the world where we have bases, or maybe more of a mission scenario, being able to support that. Similar situation if you think about like a really large energy company, like we were in the news with Aramco and Microsoft, where we've already deployed our technology. We're starting with one site, but they have rigs in refineries all over the world, onshore, offshore. And so the idea is that this is distributed infrastructure for all of their operations. And what's really interesting is if you open up our operating system, we call our platform the Armada Edge Platform, AEP, you see a fleet map, and it shows all of your galleons as well as any other connected assets that you have all in a single place. And so what we want to be is that single partner for the most important organizations in the world, obviously aligned with the US for all of their operations.
Can you talk to me about the history and development of Starlink? That feels like a foundational technology that unlocks a lot of what you're doing. How big is Starlink? How useful is it? Where is it going? Where do you expect the capability unlock points to be? Is there a framework where I should be thinking about Starlink in the same rollout as 3G, 4G, 5G, something like that? I imagine that we're still in the exponential rollout phase of that technology.
Yeah. Absolutely. So Starlink only launched in public beta in November of 2020. Mm-hmm. So it's a relatively new technology. The first couple of years, they were focused on consumer business, and then they started selling to enterprise and then also working with the government with Star Shield. So you're really only talking about a few years, and they're now in, I think, well over 140 countries all over the world. Mm-hmm. And what's been really interesting, we've been working with Starlink from the beginning of Armada. So I've been working with them since the inception of the company, and we have a great partnership. But the technology is continuing to get better and better and better. When we first started working with them, a lot of people were using it in like pockets. Take like a really large energy company, they might use it as backup form of connectivity, yep. But they wouldn't use it as a primary. What's ended up happening is that everything that Starlink does is getting better really, really fast, including new generations of the birds, the satellites up in space, which are getting better performance. There's new types of terminals. There's even a new kind of like priority lane. They call it multi-KU, where you can get better performance, a little more expensive. So what's happened is a lot of these organizations, they started to use it as backup, and now they're actually starting to use it as a primary source of connectivity. And what we expect is over the next 5 years, it's going to cover the entire globe, and you're going to have LEO connectivity that's as good as having fiber in a lot of these locations. And so wow. we're building for that world today and sort of completing the rest of the compute stack for that world.
In terms of fiber, I mean, that seems like speed, but is there a world where when you're in the data center space, like you need the pipe to be extremely big, and we're hoping that the rollout of Starlink will enable bigger and bigger pipes? Is that the correct mental model?
Yeah, what's interesting is that a lot of times people will not want to send all the data back. So sure. They only want to send the metadata back. So what's sure. very kind of like synergistic between what Armada does and what Starlink does is we can work with them. The performance, will continue to get better and better from a latency standpoint. We will handle all of the local data processing, and then we'll use Starlink to send the metadata back, right?
Yeah.
And there's really interesting things also as we're continuing to evolve what we do. So we started out with inference. That was the primary focus, was like, okay, you take an AI model that's been trained in the cloud, you run it at the edge on our infrastructure. Now with this Leviathan launch that we recently did, we've kind of completed the picture for a AI factory that can be deployed in weeks versus years with a traditional data center, and it's still mobile, so you can relocate it as needed. And what is interesting there is that you could do very cool things with like federated learning. People are going to want to take these models, sort of fine tune them for different scenarios and run them at the edge, but they're going to want to leverage the improvements in the model across all of their different sites. And so the way that we're evolving, the way that Starlink's evolving, we think we're going to continue to unlock a lot of new high value use cases that way.
Yeah. Can you walk me through some of the like enterprise infrastructure that you bring to a customer that's not out of the box with Starlink? Because I know that SpaceX is a fantastic consumer product, but there's a certain level when you get into the enterprise workloads that you need another partner in the stack to actually deliver capability.
Yeah, we're seeing that customers want to use multiple connected assets. We call all these things connected assets, and it's LEO and GEO satellite connectivity. So they sometimes will use Starlink, but they'll use Starlink plus like a Hughes or a Viasat, a GEO satellite connectivity. Yep. They'll use SD-WAN devices like Cradlepoint and Peplink. They'll use drones, like we have a partnership with Skydio on the drones.
Oh wow!
And so what these customers want is they want somebody to help bring it all together to solve their problems at the edge. And that's what we do. And so a lot of times when we'll get involved, working on opportunities with Starlink, they are already working with Starlink, but then there's something else that they want to do in addition to that. And we help that. And then the other thing, there's, different things that customers want just in terms of optimizing for different scenarios based on not just performance, but for cost. And so we help with a lot of those types of use cases.
Yeah. What's the scale of the business these days?
So we've been growing really fast. So we've only been around for a little over 2.5 years.
Wow.
We spent the first year in stealth. Raised now well over $200 million from a bunch of great investors.
Congratulations.
One of the really exciting things that happened last year is that Microsoft ended up in making an investment in the company. They invested in this round. And then I met with Satya Nadella.
Yeah.
He got excited about what we're doing. And so he ended up talking about us on stage at Ignite, their big annual customer conference. And we're going to market really globally now with Microsoft and SpaceX, among other partners. And we're working with some of the largest companies in the world. I mentioned Aramco. There's a bunch of other large oil and gas companies. We're working with some of the largest mining companies. And then, we're working with the Navy, that's public, and then with states. So we're kind of just continuing to focus on ones where, like we were talking about, we can see fleets of connected assets, like thousands and tens of thousands of connected assets being deployed all over the world, and then, scaling to become their single partner for the edge.
Yeah. Do you think the relationship with Microsoft looks more like, in the future, I go to Azure and I need to do a workload, and leveraging stranded energy just gets me a better price? Or do you think it's more like a channel partner where a really big enterprise client goes to Microsoft and they can route to you as a specific solution for a very I don't know, like off the beaten track use case?
Yeah, I think what we're already seeing is that customers want to optimize more and more workloads between the cloud and the edge. And I think that's going to continue. Like, the cloud is always going to be there, but more workloads are going to also be run at the edge. And so the more those things work hand in hand, the better it is for the customer.
Yeah.
And so how it's working today is most of our customers are already working with Microsoft. They have really large, agreements. They have Azure credits. They can actually buy all of our products under their agreements with Microsoft and using those credits.
That's interesting.
And then Microsoft sellers also get some credit, so it kind of all works together. Everybody wins.
Yeah.
But what's nice for the customer is there's different capabilities that they already are using from Microsoft that have never been available in these more remote sites, and we're making them available in these more remote sites. And that can range from, the latest AI model that's been trained in Azure that somebody wants to run locally at the edge, to, things that are more basic. Like, an example is, in the Galleons, you can have what's called Azure Stack, which is a piece of hardware that Microsoft produces.
Oh, interesting.
And a lot of applications that these companies like to use are designed to run, and they already run on that, but that's never been available at the edge. So we had a partnership that we announced with Microsoft and also Halliburton, where there's a series of applications for, like, production automation that these large energy companies are already using in their more connected sites. We're just extending that to the more remote sites. And I think that's,
so you don't have to completely re-platform and go down to, okay, I got to make sure it runs on Linux or it runs on CUDA. Like, you can assume that you have access to all the niceties of Azure, but at the edge.
That's right. Exactly.
That's awesome.
Yeah.
Congratulations. This is a fascinating business, and I really appreciate you taking the time, hopping on. Would love to talk to you again.
Your travel schedule must be absolutely insane.
I'm on a plane a lot these days.
Yeah, next time you're out at some stranded energy, call in from the field, from your phone, presuming you have Starlink or at least cell service, and we'd love to see what it looks like to see some natural gas plant flaring for the last time before it becomes tokens.
Well, let's do it. I'll put my Starlink Mini in the backpack and
Fantastic.
Make it happen.
Amazing. Thank you so much for hopping
on. On all the progress.
We will talk to you soon. Have a good one.
Thanks again.
Up next, we have Samir from the Colin and Samir YouTube channel, of course. Second time on the show. We ran into him at the Coinbase base launch event. Very briefly chatted in the stairwell. We were moving past each other. Very excited to welcome him to the stream. Samir, how you doing?
Looking professional.
Looking extremely professional.
I don't know if we have your audio yet.
I think we missed
That might be on
audio.
our team's side.
Let's check. We are not getting audio, but
it doesn't matter because you look fantastic.
Yeah,
I'm clearly hitting the gym. Ben, is this on our side or?
Okay, I think you're muted. Let's try and throw that on, and we'll bring him in and continue the Glazinator 3000. The white balance on that camera, phenomenal. The exposure, to die for. The lighting, very soft, very neutral. Harsh noise. Let's see. Can you hear us, Samir? Welcome to the stream. Nothing yet. Let's work on that. We will bring.
I mean, what a moment. You know, even creators at the absolute top of their field, the apex content creators, still learning, still grinding.
Yes. Let's do one timeline post, and then we will move back into Samir. This interesting data point to calculate the grind score of a company. Have you heard of this metric before? So Figma is in the top 15 companies in terms of grind score. Grind score is the percentage of employees that have a positive business outlook divided by the work-life balance. So you're working really, really hard, but you are extremely optimistic about the company. And topping the charts are Applied Intuition, who we talked to, Kaser Yunus. We talked to him at Hill and Valley. The Boring Company, of course, an Elon company. You're going to be working very hard, but if you believe that you're going to drill tunnels all over the world, you're probably pretty optimistic.
I had a roommate when I first moved to LA that worked, a buddy of mine that worked at the Boring Company, and I thought I was working hard, but he would often leave before I was up and come back after I went to bed.
It's an extreme company. I've heard of stories of investors who were trying to get allocation in the company, and a prerequisite was basically that you go do a full month of full-time work to advance the company. It's like, oh, you think you're going to add value? Yeah, come out here for a month.
See it.
Just be in the office every single day.
I'd love to see Ramp up there and Vanta, and ideally, we can get all of our sponsors into the top 15.
Shield AI. It's a good crew. Also, Gautier, I'm pronouncing it correctly finally. Yes. 6 months into reading his posts on the stream. I just vibe coded this. It works flawlessly. And it's a picture of a plane with an engine where the plane should be.
I actually think this plane should exist.
Would this fly? It might actually work. I don't know.
You got me now?
Samir, we got you.
How you live. Doing? Let's go.
We're just looking at a random image of a plane.
Oh, we got the other setup. We'll have you on again very soon to get the full experience. But great to see you.
Great to see you. How are you
guys?
Doing?
Sorry, I'm giving you this non-premium experience, but
I mean, it's still better.
This is the nature of streaming, baby.
90%
We're live.
of our guests. So
yeah, this is fantastic. What's new in your world? What's the latest and greatest? Give us the little update, and then I want to go into just AI, creator economy, Disney, a bunch of stuff. We'll chat about.
Amazing. New in my world. I mean, dude, this has been the craziest year of my life. I don't know if the viewers know. But both mine and Colin's homes burned down in January, which is a crazy experience. And then 12 days later, I had a baby. Yeah. Colin and his wife just had a baby about 3 weeks ago. So,
well, congrats on the baby, and sorry about the house. It's a very, very tumultuous time for sure.
Actually, it was a conversation with Reid Hoffman.
Okay.
That was really interesting. He, on his way out, we were chatting mostly about AI and the world of creators in AI, and then on the way out, he turned around and looked at Colin and I, because he knew about what had happened earlier this year. And he just looked at us and he goes, "Never waste a good crisis." And then walked out. And I was like, whoa, that is some amazing advice. So trying to, what's new in my world is trying to understand that statement more and what that means to me. A bit of what that means is we've always wanted to do in-person events. We're starting to do in-person events now. We have a big one in New York on September 4th. So, on one side of the spectrum is like content, AI, digital. The other side of the spectrum is just like getting back out, being in front of people, being with the community.
I know you've done a lot of public speaking. What does a good in-person event look like for you? Because I can imagine like you have such a dedicated fan base. I remember running into you at one of those YouTube VidCons or something, and you were getting swarmed. I imagine you could just do Q&A for 2 hours and everyone would be satisfied. At the same time, you could define like a very tight, 45-minute presentation with slides, take people through the history of the creator economy, where things are going. You could also just do interviews and interview top tier people the entire time. How do you think you want to play it?
So we actually, the first thing you do is like you ask. So this is an application only event.
Okay.
And in the application, we just asked, what does this event have to do to be successful in your mind? Like, what does it mean to be successful? Yeah. Also, like the two questions that Tim Ferriss gave us. One is, what are you here to give? Like, what do you feel like you could give at this event? And then what are you here to receive? What like piece of advice? So I would say like overwhelmingly, right? Like there's 380 confirmed applications for this event, represents over 300 million followers.
Wow.
I would say 90% of people just said that being a creator is lonely and I want to meet other people in the industry and like other like-minded individuals.
Totally.
So I would say most events probably undervalue free time and space and prompted networking or prompted conversation and overvalue what happens on stage. Totally. I'll tell you, like, not one application said, man, I can't wait for a panel.
Yeah. All of that is window dressing. It's always window dressing just to like an excuse to get out there, and then you're just like hanging out at the cocktail party the entire time. But that's the best. That's what actually makes it good.
I feel like for me, even like when I've been on panels, like to have a mediocre panel is probably the easiest thing in the world.
Oh yeah.
Right.
Yeah.
And so like to make it good, I think exceptionally challenging to make it worth your time. So we're working hard to do that. But mostly like people want to hang out with each other. Like people are lonely. People spend a lot of time at their computer. And like being in a curated group of like-minded individuals is fun. So I think do you have a location
or philosophy around what makes for a good spot?
I think New York City is like the greatest, right? Like I just think coming to New York is really fun. 62% of our attendees are traveling in, which is really interesting. And you know, the venue is at the refinery Domino Sugar Factory, which is like this big glass building that has like a views of the city. So I think what was important to me was like you walk in and you're already like, this is cool. Yeah, I'm excited to be here. So
yeah, makes sense. We were debating this earlier. There's an article in the Wall Street Journal about how Disney is wrestling with the way they use AI. A lot of companies are going through disruption. Maybe it's a sustaining innovation. Like Microsoft's doing great, right? And it's not disrupting their business. They're just printing money all over the place. Everything's growing from Excel all the way to their cloud business, to their AI business. But for Disney, it's a lot more complicated. And they were giving this anecdote of The Rock and using a deep fake to essentially create a digital twin using his cousin, apparently. His cousin go to the shoot and they put a deep fake over his cousin. Yeah. Obviously, they pay his cousin. They pay Dwayne The Rock Johnson. But there's still some backlash from the fans potentially for using AI at all. And I've just been noodling on this question of, will Disney be disrupted by AI? Will they just continue on unabated? Will it be really good for them? How, so maybe we can just kind of noodle on it for a little bit and just kind of get your initial reactions, and then we can kind of take it in a bunch of different directions.
Okay. So I think my first POV on AI right now is that I think we don't talk about AI and prompting as entertainment enough. And what I mean by that is not like its ability to produce entertainment, but the fact that it is entertaining to chat with an LLM. And I think for me as a content creator, all of us are in the business of attention. Like you guys are in the business too. Like we're looking to create something meaningful enough to capture someone's attention. And I think Sam Altman has created something that is meaningful enough to capture a lot of attention. And I think a lot of creators think about this as like, oh man, if AI can produce graphics and VFX, then people are out of jobs, and that is totally true. Like that is happening. But at the same time, us as creators, we might be out of jobs if AI itself is entertaining. Yeah. So I think on the no matter what, we live in a landscape, in a media environment where like creating stuff is really competitive. It's really hard. It's gotten very expensive. Like studios are going to use AI to supplement production. Creators are going to use AI almost every creator probably uses it to supplement production in some way, shape, or form.
Yeah, totally.
But I think if we think about it from the consumer side and what's entertaining about learning a new recipe or figuring something out on ChatGPT or writing with ChatGPT or asking questions with ChatGPT, that's where I think about like time spent on the internet, and is more time going to be spent over here. Are you guys familiar with Showrunner? It's coined as the Netflix of AI.
I have heard of it. I'm not familiar beyond just seeing like one headline.
So Amazon just backed it, and I think it's an interesting one to look at. It's essentially like they give you a show. So there's a show called Exit Valley. It's kind of like their version of Family Guy.
Sure.
But you can choose your own adventure within the show and put yourself into the show as well. So you can kind of prompt what happens next. And I think it's an interesting thing to look at of like making content playable, right? Making it interactive. Because if we look at the most culturally relevant stuff from history as well as now, video games are wildly culturally relevant. And those are stories that you can put yourself inside of, right? That you can prompt what happens next inside of that story. And you look at live streamers right now, Kai Cenat, I Show Speed, as the viewer, you actually have impact over what happens in that story.
Yep.
So I've just, rambled quite a bit about this stuff, but I think that we should really evaluate the consumer and viewer interest in having a say into what happens next, and also having interaction with the internet.
Yeah, that interaction thing is so fascinating. I haven't thought about it in that frame, but when I go to ChatGPT and I get it to generate an image, it's definitely a little bit like hitting a slot machine.
Totally.
Because I prompt it and I'm like,
unblurring.
I have something in my mind and it's unblurring, like it's in I'm in the dial-up era and it's loading. And it's like, is this the right image?
The previous generation is you talk with the designer and you give them an idea and they're like, okay, I'll come back to you in a day.
Yeah.
And you're waiting. They send you the files and you're like,
but it's
send you the
totally
Figma link.
A dopamine hit.
But compressing that down, that makes like the dopamine.
And you can see in the charts, I think ChatGPT is up at 30 minutes a day for the daily active users, and that's getting into TikTok numbers. And that's getting into Reels numbers. And so maybe it's not immediately disruptive, but it's certainly taking time from somewhere. And if you go back to Ted Sarandos at Netflix saying like, our competition is Fortnite, well, your competition is ChatGPT now. If people are having fun on there, even if they're not watching, movies yet on there, just the interaction, even if it's text-based, it's all in the same media. It's all in the same screen time.
Yeah, Casey Neistat came on, I think, a week and a half ago and was saying that he's just like feeling like it's like this tidal wave that's going to wash over everyone and nothing will be the same. And it was almost, I wouldn't say it was like super bearish or black-pilled, but it was just like, get ready, it's coming, it's going to disrupt a lot of different verticals. I'm curious what percentage of creators that you talk to are more excited about the potential of AI than they are scared.
The fear versus greed index.
Yeah, exactly.
What they say in the public markets.
So that's really interesting. I think like the aspiring creator, the young creator is fearful and angry. And like we get a lot of anger when we talk about AI.
Sure.
I think for me, I don't feel that way. I think there's an inevitability to it. That's like, if you do feel angry, if you are a young creative and you're like, this thing is making logos and people are using it to do their branding instead of hiring designers, and you feel angry about it, it's like, it's upsetting, but there's an inevitability to it. Like, it's not going to stop. This is the worst it'll ever be. So I think from the professional creator perspective,
this is the best it'll ever be.
No, the worst it'll ever be.
This is the worst it'll ever be.
It's just getting better.
Oh, you're saying that the AI is the best.
Yeah,
I was saying it's the
right.
best it's ever going to be for you if you're just angry that AI is doing work.
No, the AI right now, what you can do with AI, this will seem comical to us in 5 years.
Totally.
And so it's only getting better. And I think every professional creator uses it in some way, shape, or form. I think one of the maybe the nerdiest things that I ask my friends and that I tell my friends is like, if I have a favorite prompt or if I ask them what their prompts are, but I ask always, if we write something, I ask it to challenge based on being a different persona.
Sure.
So, I've done this as Casey before. Hey, imagine you're Casey Neistat. Give me feedback on this.
Sure.
Imagine you're Johnny Harris. Give me feedback on this intro. So that's been a really, that's probably the simplest, most effective way, but all the way up to we use it to mock up thumbnails now.
Yeah, I was going to ask you about the thumbnail, because when so Mr. Beast had his AI thumbnail generator, and then he got some
pushback,
extreme backlash, but it seemed like it was from a bunch of
a bunch of it was take on this.
My point of view was that he should have said, I understand that this is disruptive to a small number of people that do thumbnail art as a profession, but I care more about democratizing access to great thumbnails by making anybody generate them, and I'm going to keep this in the product.
Your point was that putting it out there was pro-creator, anti-thumbnail artist, and that was the trade-off that he should have taken.
And so in my view, he and I'm sure he has a bunch more context, but in my view, he was siding with the 10,000 people in the world that make a living doing thumbnails, and
instead of the millions
of people that want to create.
I think actually the core issue with the announcement was the face swap. So what he did was he showed two thumbnails, and he said it's very simple to put your face on this thumbnail. Now, look, that happens on YouTube all the time, right? The reality is that when one creator makes something that's really successful, another creator just goes, oh, cool. That's almost like public domain, that idea. And I'll just take that and reinterpret it for my own channel. And sometimes people are so egregious to just put their own face on someone else's design. We made a video about this called the copy and paste culture of YouTube, because it is a big culture. And I think what a lot of creators were feeling was that Jimmy was making that process very easy. Thumbnail designers, as a cottage industry of YouTube, are some of the most powerful people on the platform. They literally are the gatekeepers between creators and millions of views.
Attention, yeah.
Yeah, totally. They are very, very talented. Even for us, what happens for us is we're all visual people, so we mock it up with AI, but I don't think anyone, I think Dude Perfect did one thumbnail that was pure play from an AI generated thumbnail, which was an airplane with a bunch of basketballs coming out of it. That was an impossible photo to take, or an impossible, thing for them to mock up. And the thing they got from AI, they're this represents the video concept. People were upset about that. But I think mostly how creators operate is they go, here's the concept. How we operate is we go, here's the concept. Okay, here's how it looks visually. And now we hire a designer to bring that to life. And we still do that. I think thumbnail designers are wildly talented, and they operate more as strategists as well. But it's a fascinating cottage industry that people looking into YouTube probably have no idea exists.
Do you think that there's a role in the future for thumbnail conceptor? Because I've made thumbnails, and they live and die. Obviously the last step of the Photoshop work is extremely important, but you have this 20-minute video where you talk about so many different things, and there's so many different visual elements, and then you're trying to distill it down into the 3-element rule, or just one thing, and picking that one thing that the plane. I can imagine what that video is about right now just based on what you said, but that could have been botched so many times on the concept level. And it doesn't matter if you had, the best photographer in the world working with the best Photoshop artist, and the entire AI team from all the different foundation model lab companies working on it. The wrong concept's just not going to break through, because people are going to be this is confusing. I don't want to watch this.
You can't fix a bad idea.
Exactly.
You just can't. You can't. But I think what makes a good idea is really hard to decipher today.
Totally.
Because I think on the internet, we live in a world of two extremes. One is, if I'm going to click on something, it has to be something I've never seen before, on one extreme, right? So Mr. Beast, let's take that and go, he just raced an F1 car and a cheetah. I've literally never seen a cheetah race an F1 car. So fine, concept. Jimmy, I'll click on that, because I've never seen it before. On the other side of this attention spectrum, I think it's show me something that impacts my day-to-day life, either with my friends and family or like is interactive. So your guys' show is a great example of something I think lives on that side, which is like I get to turn this on and it impacts my life because I get to be a part of a water cooler conversation. Yeah. I can turn to my friends and I have more things to talk about with my friends. Love Island is massively culturally relevant. I think that is something that, you know, even around my social circles, people talk about, and they get to connect with it with their wife or with their girlfriend or with their buddies. Like, so I think we live in those two extremes. Anything in the middle is really hard. Yeah. Right. Like educational stuff, very hard right now. Yeah. I think viewership is going to go down in the middle. It doesn't mean it's less impactful. It's still impactful. But I think
yeah, it is interesting that the educational content is. It used to be if you wanted to quickly understand a complicated topic, finding a short YouTube video on it was super effective because you're like, I don't have to Google and I don't have to find this summary and I don't have to piece together this Reddit thread and that blog post and this news article. And I'm just going to watch this like 3-minute video and have a good understanding. Now you can just prompt the model and say, how does this work? And then you can ask follow-up questions and you can ask follow-up questions and you can click in to see the source. Yep. And I feel like that middle is just getting hollowed out. Yep. And we're not that far from OpenAI just being like, do you want to generate a 10-minute video explaining this? I'll turn this report into a video, right? Yep. And that's that kind of like,
I mean, you can already do it with podcasting. Mustafa Suleiman from Microsoft, the CEO of Microsoft AI, on our show prompted a podcast that was really compelling using Copilot. And I think though, have you guys ever used the like kind of FaceTime feature with ChatGPT?
It's the voice mode, right? Yeah.
It's voice mode, but it's video too.
Oh, just video.
It's video now.
Oh, yeah, yeah.
That, no. So I did that in the kitchen. Okay. Like 3 nights ago, I made, you know, I saw some, like everything on Instagram, on my Instagram feed is like cottage cheese, right? It's just like put cottage cheese in something. So it was like these like cottage cheese protein brownies.
Awesome.
And I was like, all right, I'll make these. Yeah, and I, in the middle of it, I like had a question. And so I opened that up and I had like the video up. And I was like, all right, wait, I only have 1 banana. Like, what do I do next?
Oh, interesting.
And it was just live prompting me. And I think the obvious thing you recognize is that won't be our phones soon, right? Like maybe it'll be glasses, maybe it'll be contact lenses, maybe it'll be like contact lenses and an earpiece, but there will be like an omnipresent nature. And that's very dystopian. But I think this all connects to that question of education. Like educational content will be real-time, personalized in my ear and in my eyes, at least I think.
What did you think about the launch of Waves, the new glasses built initially for live streamers? It felt like the most polarizing launch where if you were a live streamer that does IRL stuff, you were thinking, this is amazing. I want to get this as fast as possible. And if you were a member of the public that values your privacy, you were, saying like, please, stop this before it launches.
I think it's, okay. I think on the live streamer side, I mean, my perspective is POV is not that interesting. Maybe I'm wrong, but I think what's interesting is like a filmer filming speed doing something. Not necessarily POV. The only guy who nails it is, that guy in New York who like plays the keys and like someone raps with him.
Yep.
That's like the dopest kind of solo dude. I assume he's solo. Maybe there's a cameraman with him, but
yeah, I mean, it seems like it's just like one of many niches, and there will be creators that shoot wide angle, shoot drone footage of themselves doing things, shoot like cinematic stuff. It's just like one of the tools in the tool chest. But I mean, people really like humans, and they really like seeing Speed or Kai Cenat, and they like that relationship.
Totally, yeah. And I think
you like feeling like you don't feel like you're somewhere, like you don't like, for example, like the idea of an NBA player like wearing glasses, that might be cool for a second, where they're dribbling down, like shooting, pulling up, but then you probably want to just go back to like feeling like you're actually there in the stadium, seeing it.
I would get bored quickly with that. I think on the privacy side, like, you guys are in LA, right? Yeah. Like you see Waymos all the time. I think there's a lot of concern about that too, of like, okay, now we have more cars on the street that just have like tons of cameras on them.
Yep.
And I think just generally there's a lot of concern about that, but it is like a natural evolution to us just unloading our lives and data on the internet. Like, people are concerned about that. But are they concerned about their ChatGPT search history or question prompt history? Like, I think Scott Galloway said it, like, if you want real anarchy in the world, just release everyone's Google search history. Like, that would end civilization. And I think,
do you think it actually would, or do you think everyone would just be like, okay, we're all equally weird? Like,
yeah, or it would be this like cool moment of just like the veils lifted, like we're all weirdos.
John's
and like,
search history: how much creatine can I take before losing my life?
I don't know. I don't know how this stuff's going to play out. I just think that you know, Colin and I did get the opportunity to spend some time with Sam Altman, and I think, you know, my curiosity with having a lot of the like Mustafa on the show or Reid Hoffman on the show is to understand the incentives and the curiosity of the creators of these programs. And even with someone like Sam, like, it's actually hard for me to fully tap into. I understand the desire to create and to innovate and to be number one and to push things into a place you could never imagine. But I think the implications of this are pretty different than anything else. And I think the implications of advances in AI are going to change human society in a way that, like, I think Casey's right. Like, it's going to change things in ways we can't imagine.
Yeah, one thing that's interesting when I think about creators that I've watched over the last decade, you think about in music, like Anthony Fantano. Like, there will be an AI creator that just instantly reviews a new Drake album. And it just and it can come up with some analysis of the song, and it'll tell you what this lyric meant, and it'll say, you know, this sounds similar to a song or a unreleased track from this period, and it'll give you this like context. But people will still want to hear what Anthony Fantano thinks about the album.
I think we look at it in the terms of like efficiency and inefficiency. There's certain times where you want efficient media. So like, let's say I'm going into a meeting and I'm like, wait, I didn't prep for this. I need something really efficient. Like when I was in high school, that was SparkNotes. Do you remember SparkNotes?
Oh,
you guys are too young for SparkNotes.
No, I use SparkNotes, of course.
SparkNotes was like, if I didn't do the required reading of class, which I rarely did, I would just
the original Cluely.
Yeah, exactly. I would go like, all right, I got the SparkNotes. So I think there's like efficient media. But then if you look at, there's also people who just love reading a book. So there's going to be both ends of the spectrum.
I wish I in college, if you could generate a podcast on any topic. I mean, that would be amazing. I'd be like, I'm going to go to the gym, and when I finish this, I'm going to know like 90% of what I need to know about this book. I'm going to go into the test. I'm going to write the essay.
I used to get the audiobooks for every book. I'd buy the book for the course, and then I'd also buy the audiobook because I was an auditory learner.
But we can't assume that just what humans want is efficiency all the time, right? Because I don't want efficiency all the time. Totally. Like, you think about going to a concert. Going to a concert is the least efficient way to hear the music from that artist. You go, you have to park, especially in LA, it sucks. You have to figure out parking, and there's traffic on the way in. You go in and like, why are you there? You're there for a collective human experience. You're there for the messiness of how John Mayer is going to play. I'm speaking about a John Mayer concert. So you want to hear him play the guitar differently than he would. If I just want to hear the song Daughters, I'm just going to go on Spotify and hear the song Daughters. So I think you just play with those two worlds of like, we will always kind of crave efficiency and inefficiency. There might be areas where we want it more. So like brainstorming is a really interesting example. Hey, I want 100 variations of this idea. Presently, an LLM can do that better than 5 people in a room and faster than 5 people in a room if you want to see every variation of an idea. But you know, you want to just watch a movie and see if you can come up with ideas based on that movie. Like it'd be hard for an LLM to match your taste in that way. Or I just think there's like efficiency and inefficiency, and they're both going to play together.
We really got to book an hour for this. We could just keep going forever. Yeah. This is fantastic. We do have another guest joining.
No, let's do it in person next time.
Yeah. Oh yeah, you're in LA. Just come by.
Dude, I would love to come see it. Also,
that's amazing.
I mean, I totally botched my my good looking setup.
I'm sorry. It's high stakes with the live stuff.
It's high stakes.
We saw the potential. We saw a glimpse of the potential.
It was a humanizing moment for your audience. You know.
But yeah, you should come in. You should come one day and close out the show with us, and then we can pick your brain about production stuff, and you can help us get an upgrade
John
going.
just said pick your brain.
What's that?
Well, I mean,
what's wrong with that?
Asking Samir
I'm sure he gets that message 1,000 times a day. I'd love to pick your brain, Samir.
Tim Ferriss gave me a hard and fast rule. He said, if anyone says pick your brain, don't go to the meeting. Yeah, don't go to the meeting. So that's my hard and fast rule. I will not be there. If you have another suggestion, then I'll come in for that. But
we'll hang out. We'll have lunch. We'll hit the gong.
Awesome.
All right, guys.
Great to see you.
Thanks for having me on. See you guys.
Cheers.
Talk to you later. Bye. Up next, we have Flo coming into the studio to the TBPN Ultra Dome.
Legend.
Welcome to the stream. We kept him waiting. We'll try and move through these next guests quickly, but very excited to catch up with him. How are you doing?
Boom. Welcome. John will be back in a minute. How are you doing, Flo?
Good. How's everyone doing?
Great. It's been a slow summer. Not much news in AI. Everyone's just clearly taking a breather. Of course not. I know you guys have been busy. What's going on in your world?
Yeah, just announced 3.0. It's been an insane last couple of weeks. Been working on this update all year. We're just making it way easier to create way more powerful AI agents.
Incredible. When did you decide to adopt the versioning for Lindy? Because it feels smart to kind of anchor the team and your customers around these major updates to the product versus historically people might have a product launch, but they're not necessarily signaling hey, this is a massive advancement. It's an entirely new version.
Yeah, no, we've done that from the beginning. 2.0 was in November last year. Actually, even smarter, and that's what I want to do next time, would have been to name them. I want to, Lindy 3.0, how Apple does Yosemite and stuff. I want to give them cool names moving forward.
Yeah, I'm trying to think. We'll come up with the right series of names in the right category. Do something.
I'm thinking sci-fi books. What would you think of a fire upon the deep? The metamorphosis of
or Lindy Snow Crash or something.
Yeah,
like
exactly,
that.
exactly.
That's great. What? How are you guys using the new Lindys internally?
Oh, we're using it all day. I think one of the most insane things that it's automated for us is it's replaced the QA engineer. Wow. It's just it's getting very meta. We are using Lindy to QA Lindy, and so every hour we have a Lindy agent that wakes up, that tries the entire core flow, literally signs up with a new account, tries to pay, create a new agent, tests the new agents. You have an agent creating an agent and testing it, and then if anything goes wrong along the way, pings the on-call engineer. So we've been using that for weeks, and it worked beautifully. It's amazing.
How do you think about reducing the time, time to value for somebody that's coming in to use Lindy? I imagine that's key. People are so used to signing up for a SaaS product, knowing exactly what they're getting, and having there be a lot more kind of controls around what the product does. So it's not a sort of build your own adventure. Whereas I feel with Lindy, historically, you do the customer needs to really embrace hey, I have to figure out how to, when you hire a new employee, very few roles can somebody just come in and without any ramp up time just immediately start crushing it. And so I'm curious what that looks like for you guys.
Yeah, can I show my screen? Does that work?
It does. Everything's live, so whatever you share will be burned into the immutable record of the internet. Oh, that looks great.
Well, yeah, so this is an excellent question. That's the problem we've always had from day one, is it's almost too powerful. You have to do everything yourself. And that's why the vision from day one has been it's just like an employee. It's very easy to set up. You can just talk to it and tell it what you want to do. And so now the new app is just a text field. It's this thing, and you tell it what you want to do. It's hey, I want an agent that will monitor my support inbox. And then you can iterate with it very interactively. And we have a bunch of templates here for sales, customer support, personal productivity, engineering. Right here, the QA assistant is one of them, or a software engineer agent, human resources, a recruiting agent, or a company knowledge base. So we give you a bunch of templates, and then you can just create your agent in a minute and a half.
Are you running into any problems just linking up private data sources? I mean, I'm just thinking from a consumer perspective. You have a bunch of news subscriptions. You want to log into those news websites and kind of collate a digest for you. That's something it would need a password for. It would run into a number of paywalls. Are you seeing a lot of luck with jumping through login flows, or are you getting hit with CAPTCHAs constantly that are intractable?
Oh, no. I mean, like, so that is a big part of what we're announcing today is like autopilot. So basically, your agents now have their own computer. And if you need to give it a login, you can literally take control of the computer and log in for them. So let me just pause the screen here because I don't want to show anything crazy. But
is that something that you do like once, or because like when I think of the benefit here, I think of like a really long running like cron job based agent, essentially something that feels more like
You're
a
still
worker
screen
on my
sharing,
team.
by
You're
the
still
way.
screen sharing. Yeah, your list of passwords is up now. Just kidding. The API keys are leaked. And it's
oh wow, you did $1 billion in revenue yesterday.
No, I mean, yeah, you log in only once. So it's like,
Okay, great.
I am screen sharing on purpose. So this is an agent that set up. This is actually a little bit of a dirty secret. Like, I don't like LinkedIn. I'm more of a Twitter guy.
Sure.
And so I post on Twitter. I don't want to post on LinkedIn. But I have an agent that, so it is a cron job. Wakes up every day at 9 a.m. This was this morning. And you can see it's logged in from my Twitter account. Like, this is authenticated as me. And so it goes on my Twitter. It's also authenticated as me on my LinkedIn. And it basically looks at the posts on my Twitter and it's like, hey, this is what I think you should post on LinkedIn.
That's very cool.
Yeah,
that makes a ton of sense.
That's awesome.
And it can obviously like hydrate things and add extra context and really like transform the post properly, as opposed to just like a default binding.
Flo posts on X. Very excited to announce Lindy 3.0. It's our most powerful Lindy. And then it converts it to the Lindy, then converts it to LinkedIn. It's like, what
I learned about B2B SaaS.
Today we're transforming the power of agents to unlock productivity for everyone in your organization.
No, the real clickbait for LinkedIn would be like,
I fired every employee
Three
today.
weeks ago, I hired a software engineer who was working at 25 different companies. Here's what it taught me about building 3.0. Something like that. Anyway, well, congrats on the launch. Anything else we should know? Where can people sign up?
Yeah, Lindy.ai. It's available today. Like, I don't know about y'all. I find it frustrating when like there's a lot of like vaporware in AI. It's like this is coming one day. It's like no, this is available right now. It works. It's incredible.
Very
what's the pricing model right now?
Don't worry about it.
Like consumption or subscription?
It's consumption.
It's consumption. Okay.
It starts at $50 a month, and it's a tenth of the price of a human.
Okay, this is gonna be one of those things. Am I gonna hear horror stories about people that like forgot to, turn off their Lindy and they ran up a $10,000 bill?
Don't worry about it.
Don't worry about it.
The cost of inference is declining rapidly. Everybody's gonna make it. We're all gonna be fine.
Yeah. We're gonna distill the models.
These aren't.
I mean, look, this has happened before, and we're very generous with credits. People reach out to us. They're like, "Can I get a refund? This happened." And we're like, "Well,
of course. Of course. That makes sense.
Money is cool.
Cool. Any other tools or custom models or like RL environments that you're tracking or excited for progress to be made? You mentioned computer use, but what else do you want the foundation labs to solve to kind of so that you're like a beneficiary riding the wave?
Memory. Definitely. Memory, I think, is the big gap. And I think like there's a lot of attempts to solve this problem across the industry, but I'm noticing this pattern where it's like people and companies like ours that are stuck and cannot change the weights of the models. They think of all of those like convoluted schemes to like hack the model to do something it doesn't, when really it belongs to the model.
Yep.
And when you talk to the researchers at the labs and you ask them, it's like, we're working on memory, this is what we're doing. They tell you, it's like, don't do it. Like, let us do this.
We'll do it. Yeah.
Like, we'll do it. This belongs to the model, and the model is going to do it 1,000x better than you do. And I expect much more advanced memory schemes where it's like basically the model is going to be retrained to come out in like a year or something, like 6 or 12 months.
What are you expecting from GPT-5?
I'm expecting it to be smarter. We feel sparks of AGI daily at this point. Like we had this moment last week, like we basically accidentally built Lovable. Like, because we gave a computer to Lindy, like someone who was like 10 p.m. at the office was like, Flo, like, hey, if you ask me to build a website, she builds it and she deploys it, it works. And so like, to me, that was like a huge holy shit, like AGI, spark of AGI moment. But like, look, it's still not as good as a human. Like sometimes it's just dumb. It just makes dumb mistakes still today, And so I'm expecting GPT-5 to be like a step change and to be a big step towards AGI. But people don't realize what's happening. And I get it. People are tired of like all the AI hype and the noise. And I tell them, like, if you're tired, man, like this is only the beginning. It's gonna get a lot more noisy out there. Like it's gonna get pretty crazy.
Yeah.
I mean, I'm just, it should be exciting for everyone because Lindy today feels like the promise is automate these tasks that are boring, that a human does. The first 10 times they do it, it's interesting. The next 10,000 times they do it is very boring. And so you just free people up to do these more like higher leverage 0 to 1 type activities that can then be automated and systemized over time. So very, very cool. Congrats on the launch.
Congrats on the launch.
I'm sure people are going to be making bets on Lindy 4.0. Is Lindy 4.0 going to be able to get a college degree for me? All that good stuff.
Congratulations.
I think the irony is that these models are actually today able to get college degrees, but they can get a job as an intern, right? It's actually from the top to the bottom. So yeah.
Awesome. Well, congratulations. We'll talk to you soon.
Great to see you.
Thank you.
Have a great day. Bye. Up next, we have Dave from Rune Technologies coming in to the studio. Get that gong ready, Jordy Hayes, and welcome to the stream. How you doing?
Hey, how are you?
What's
I'm
happening?
good. Welcome to the stream.
show.
Thank you.
Give us a brief intro. Give us an update and tell us the news.
Yeah. So Dave Tuttle, co-founder, CEO of Rune Technologies, founded the company last year with my co-founder Peter, who I know was on a little while ago. We just raised our Series A, just announced it about 2 weeks ago. So excited to have closed that.
Didn't even give you the number. Sorry.
Didn't even get to the number.
I didn't even get to the number, but congratulations on the Series A. Give us the number, give us who led, and then we'll go into more about what the company's building.
Yes, we closed $24 million led by human capital. All of our current investors from Andreessen, Point72, and XYZ reinvested. And then,
awesome.
New investors, human, and, Washington Harbor Partners as well, a new investor here. And we won't announce it yet. There's going to be another one, but we'll save that in a few weeks as a little surprise.
Fantastic.
Nice.
Give us the brief history on logistics and supply chains in the U.S. military. What were we using in World War II? What are we using today? And then what does the future look like?
Yeah, and I mean, in many ways, the insane part is some of it hasn't changed, right? Like we're tracking things in analog systems. The means of a whiteboard has changed, obviously, from scratch paper back in the day. And, sometimes it's even Excel documents, but great, like the basic nature of it is still an analog human-centric tracking of things, whether that's supply inventory levels, vehicle maintenance levels, vehicle locations, and those sorts of things. And especially over the last, I came out of uniform, I'm still serving part-time even in the Army National Guard. And when I think about like how do we track what we need and where we need it and when we need it, that is still a human-centric analog process that has remained generally unchanged, at least in the last 20 years with the advent of, computers at some level and connectivity at some level.
So what's the path to actually getting this in the hands of the warfighter? Obviously, it's a newer company. You've made a lot of progress, but it's never easy getting to program of record. It's never easy getting full deployment. We've talked about the history of Palantir. Took a long time to get that out into the world. What's the plan? What's the update?
Yeah. I mean, you said it. I mean, it is a long path. We know that. All of us have come from this industry. We've lived in the defense space for years at Rune, from many other companies. I'm excited to say right now, like there's a team down at an Army base as we speak, deploying TyrOS at an exercise with an Army Corps. So pretty excited about that. That'll be our second deployment within the Army. We haven't announced it yet, but we also have work within the Marine Corps as well. Yeah. So we know we got to spin the flywheel with these types of things. And core to our DNA is how do we get out to these exercises in real world scenarios with warfighters, with our sustainment customers and do this. And that, build closely with the warfighters. In many ways, what Palantir pioneered and what Anduril pioneered, right? How do we do this with them? To then build momentum, get ahead of the requirements, do things very quickly and iteratively to then get to that goal of an enterprise, our production deployment in those types of situations. So I think you guys well know that, seed round is about, hey, do we have product market fit? Is the thing that we're building needed, right? We have proven that. And what we thought was going to take 12 to 18 months, we did it in 8 months with initial pilot contracts in the military. And now Series A is about how do we scale the team and how do we ruthlessly execute on the things we need to do, right, to meet the milestones we have to actually deploy this across not just the joint force, but even potentially our allies as well.
How much, in the recent conflict in the Middle East, how much are you trying to learn, and how much are you guys paying attention to the challenges they're facing there versus, hey, we already know our systems and processes are so broken that we just need to bring them and so ancient, I'm sure. We just need to bring them into the present and then worry about kind of more specific deployments and problems.
Yeah, well, I mean, everything's a learning opportunity, right? So whether we're talking about the Russia-Ukraine war and how the speed and the scale of sustainment that has to happen in a peer or near peer adversary, or we're even looking at the recent events in the Middle East, right? There was a not insignificant consumption or expenditure of U.S. surface-to-air missiles, even in the 12 days of conflict in CENTCOM, right? So how do we think through knowing those expenditures in real time or near real time, being able to even predict those now with those expenditures into future needs, and being able to position things and reposition things, inventories, right? In this case, munitions in the right place. To me, those are all important lessons learned, right? We have to be able to do it at the scale that is going to be required and at machine speed. And then we have to take a real hard look at what are the exquisite things that are very low density that we need to get, like exquisite munitions and systems that are going to be required in a conflict. Should a conflict come? Hopefully not, but should it come? And I think, Peter and I founded this company in many ways because I don't question that we're not going to have the most exquisite munitions, the best weapon systems in the world. What keeps me up at night is can we get them in the place we need them, at the scale we need them, at the right time, right? Can we actually do that? That's something that I think is lacking and frankly has been overlooked by the technology, companies of today, right? And how do we sustain the force and how do we do this with modern technology?
Yeah, that's the entire conversation. Capacity more than capability. So thank you for everything that you're doing, and thanks for joining the stream. Jordan,
congrats to the team too. Tremendous progress. Love to see you guys making 18 months of progress in 8 months.
We love to see it.
That's right.
Keep I appreciate that.
Yeah, we look forward to the future.
Yeah,
awesome.
Welcome back on the stream anytime. We'll talk to you soon and have a great day.
Talk soon.
Thanks, man. See you later.
Up next, we have Will Ahmed from Whoop coming in the studio. Welcome to the stream. Second time on the show. We had him on around the last product release, and we will invite him back to the stream.
There he is.
How you doing, Will? Good to see you.
What's up, guys? Good to see you.
What's up?
Great to see you.
Where are you right now? What's in the background?
This is Whoop HQ. I'm in my office, and if you look right here, that's Fenway Park.
Oh, that's right.
We're in Boston, yeah.
Boston, very nice. Oh, we got some claps from the team in the background. Someone's happy about Boston. Anyway, give us the update. What's new in your world?
Well, we recently launched the Whoop 5.0 and the Whoop MG. So 2 new hardwares, 3 membership tiers, bunch of new bands and accessories. The market seems to be loving the product. Business has been really good.
It's great.
And we've launched a lot of new features. We just came out with a Healthspan feature that will tell you your Whoop age. We worked with the Buck Institute, which is the leading institute in the country for longevity. So we found that, the top 9 biometrics that correlate with all-cause mortality. I'm sure you guys have very low Whoop ages.
Thank you.
How do you think about when just sorry to interrupt, but a lot of anybody that does any type of health testing diagnostics, a lot of people are adding an age or this kind of age score. And it feels like there's incentive for some players to just put the age as low as possible so that people share it. That's obviously not great for the user. They're like, I'm 35, but this score says I'm 25, so I'm going to share it, on social media.
I took one of these biological age tests, and it said that I had the mind of a 4-year-old.
The mind specifically. The body of an elderly man, but the mind of a...
It said I was as sharp as a 4-year-old.
Is that supposed to be a compliment?
No. But it is
the
funny.
mind. People have said I have the mind of a golden retriever.
Yes. It says you're as smart as a 4-year-old. It was impressive. But my question is, it is kind of like a little bit of an optimistic flip, because you could flip this around and just say your life expectancy, the average life expectancy is 75, and you're at 85 based on how you're aging. So
there is a
that's
company
good, but that's much darker.
That does the death calendar.
Yeah, I remember those apps, and those are much darker and spookier. sinister and weird and macabre. But this feels much more optimistic, much more tractable, something you can work towards. But what are the pitfalls? What did you make sure where without naming competitors, like what did you want to avoid in how you designed your product?
Yeah, it felt like it feels like some are just a random number generator.
Yeah,
and you're doing it with the Buck Institute.
Yeah.
Sounds.
Yeah, look, we worked with Dr. Eric Verdin, who's literally one of the best doctors when it comes to longevity, and the research institute there. We found 9 biometrics that most closely correlate with all-cause mortality.
Yeah.
And they were all things that we measure. And so we're able to show in great detail how Whoop members stack up to other people their age in a bunch of different factors like sleep consistency, hours of sleep, steps, time spent in heart rate zones, your VO2 max, your weight, a number of, kind of obvious metrics that we can qualify. And we also show all the research that we used in developing the feature. And look, it's not everyone wins at soccer. This is not a participation trophy type product. I think like people generally associate Whoop members as being pretty fit and healthy. And I think it's like 55% of people on Whoop are younger.
I was about to ask.
That means like 45%, are seeing that they've got some work to do. And that's how we think it should be. It's designed to be really transparent and honest.
Yeah, but that's a good balance, because if it was like 99% of Whoop customers just happen to be, half their biological age, you'd be raising some eyebrows, but it seems like you dialed it in appropriately. Anyway, is that a health claim? Do you need to get that approved by the FDA? Are there other things where the technology has progressed, but maybe the legislative framework or the government regulation framework hasn't advanced as fast as you'd like, and you feel like the consumer might be getting left behind because of some cruft in DC?
It's a good question, because we've had some challenges with the FDA recently. I think it's worth just stating that the role of the FDA is to regulate products that have a medical diagnosis.
Sure.
And the 21st Century Cures Act makes it pretty clear that if a product is intended for wellness, it's not designed to be regulated.
Mm-hmm.
And the structure of this exists for heart rate, sleep, so on and so forth, where let's take heart rate, for example. Heart rate monitoring has existed since the 80s with chest straps and other tools. Obviously, Whoop does it today, Apple Watch, so on and so forth. And so you can show heart rate in the context of sleep or exercise or whatever, and that is wellness, and therefore is not regulated. If you want to tell someone that they have AFib, that all of a sudden is a diagnosis, and so that would need to be regulated by the FDA. Now, just to say it, we also spent the last 2.5 years getting regulated with the FDA, doing clinical trials, and so now we have a medically cleared product by the FDA to do ECG monitoring from the wrist and also to do AFib detection. So that's just one example of the difference between wellness and medical. With sleep, you can say hours of sleep, you can do staging, that's wellness. If you want to tell someone they have sleep apnea, that's medical. And where the FDA is inconsistent on this is with blood pressure. So Whoop spent the last 3 years and tens of millions of dollars innovating to develop blood pressure insights. And this is a really cutting edge feature that allows us to measure blood pressure from your wrist and give you a daily estimate, which, just to say it, is a pretty big innovation in the wearable space. And we brought this to market in May, and the FDA has come out saying that they think that it should be a regulated product. Now, again, back to this distinction between wellness and medical, we built the feature for wellness intended use. So it has a lot of disclaimers around it that it's not designed to diagnose hypertension, it's not a medical device. And it shows you how your blood pressure impacts sleep and stress, how it's impacted by nutrition. I had a woman in my office last week, and she was seeing low readings on her blood pressure insights page. Turned out she was dehydrated. She drinks more water, it goes back to, a more normal reading. That's like a classic wellness use case. So we built this wellness feature, and now we're in a debate with the FDA over it. But we're fighting to keep this product in market because At the end of the day, it's the right thing to do. Consumers are loving it. It's innovative. And by the way, it's the law because the 21st Century Cures Act says that you can't regulate wellness intended features.
What are some of the breakpoints for amount of money to really have a good relationship with the FDA? Like, I imagine like a seed funded startup has no chance of getting cleared as a medical device for, $300,000 investment. I imagine Apple should have no problem because they probably have an office in Washington, D.C. But, you're like a pretty big company. I feel like you should be able to afford it. But like how tricky is it and how expensive is it to actually just go for the other designation with any of the wellness features and just kind of shift them over into the medical feature? And would there actually be a product or consumer benefit if you did that?
Well, it's a good question. There are a lot of costs associated with being a medical device.
Mm-hmm.
You have to go through a clinical trial process. You have to work with the FDA. Depending on the functionality, you might need to hire a lot of consultants to support that. So it's a hard thing for smaller companies to do. The other thing, just to say it though, is it's time consuming.
Mm-hmm.
So it'll delay your time to market by 2, 3, 4 years, depending on the type of FDA approval that you're seeking.
Yeah.
And then I think the real main question is, what's the intended use? Is the intended use around describing wellness, or is the intended use around diagnosis?
Yeah.
And so our intended use today is using blood pressure insights to help people understand their wellness. And in the long run, of course, we can imagine having a more diagnostic product, but that's not what we've shipped yet today, nor is it what we're claiming to have.
Yeah, and I imagine that even if you have unlimited money, you still will be delayed by a couple of years while the FDA reviews these claims, and then the problem is that you're shipping new hardware like every year. So
you could have millions of people that are dehydrated and have
you're
bad
way
blood
behind.
Pressure because of it and aren't even able to be aware.
Very rough. Well, what's next? What is the plan? Is there anything on the horizon that you want to get through or move over, or is it just kind of like sort this debate out and then move on?
Oh, we're going to keep working with the FDA. I mean, like I said, we've been working with the FDA for years, and I have a lot of respect for the FDA. I think they have an important governing function in this country. I just think they've missed the mark on this particular case, and so we're going to fight for that, and we're going to fight for health data for Americans. In terms of where Whoop is going right now, we just announced a bunch of new features that are coming out before the end of the year, and one of which I'm very excited about is advanced labs. So Whoop is going to be coming out with our own blood testing. You're going to be able to upload all of your past blood tests. Doesn't matter if it was through a doctor or another product or what. That's all going to be able to live inside Whoop. It'll be graphed over time. It'll become part of your Whoop data. And then on a go forwards basis, you'll also be able to take blood tests. And this is a real new capability for the company, but it's going to help bring more and more of this data under one umbrella, one roof, so to speak.
And that's all HIPAA compliant, I assume? Is that the compliance framework that matters here?
Yeah, you have to work with the right partners in order to enable it, and obviously the testing is pretty sophisticated.
Sure.
We've got some great partners in the space,
Makes
but
sense.
a lot of it's also explaining what the data means.
Yep.
And I think that's where Whoop historically has been quite good, is presenting information and trying to coach on it.
Yep. Makes sense.
What's powerful about the blood testing is we'll now be able to pair it with your 24/7 physiological data. So, maybe if you're not sleeping well, it has something to do with a biomarker or a blood test. Maybe your exercise is improving something here. You want to be able to have all this data under one umbrella so you can understand it.
Makes sense. Well, thank you so much for stopping by. Good luck with everything at the FDA, and good luck with the rest of your day.
Have fun with your friends over there. I'm sure you guys are spending a lot of time
together.
together.
Enjoy the frequent flyer miles as you go to Washington, D.C. regularly, or maybe you take the train. Who knows? Anyway, thank you so much for stopping by. We'll talk to you soon.
Dude.
Thanks, gents. See you guys.
Have a good one. Bye. Up next, we have Aneesh from Knit coming into the studio. We are talking about them, and I think we got some good news. I think we might be hitting the gong.
I'll let you
again.
Do the honors, John.
Ooh, first gong hit for me for the
day.
Show, for the
then
day.
We're gonna have to hit the gong for Palantir. But
how are you doing? Would you mind kicking us off with a little bit of introduction on yourself and give us the latest news?
Yeah, for sure. Well, first of all, thanks for having me here.
Of
My name
course.
is Aneesh, one of the co-founders and the CEO of NIT, and yeah, we're excited. We announced our $16.1 million Series A on Thursday.
Let's go. Congratulations.
Backhand. Nice.
Backhand. I love it. Amazing. Talk to us about the company. How are you pitching it right now? Who are the customers? Break it down for us.
Yeah, for sure. So yeah, NIT, we have built a system of agents that is really building the simplest way for enterprise consumer researchers to go from, hey, I have a business question, to here's a story I can share with my stakeholders. So yeah, what we're solving is this age-old problem of anytime you want to talk to your customers, especially these large enterprise brands, it's taking them 4 to 6 weeks. They're spending anywhere from tens of thousands to hundreds of thousands of dollars. And we're helping them do that now in days instead of weeks and at a fraction of the cost. So working with the largest enterprise consumer brands today.
What is the key differentiator just AI? Are there other differentiations on the go-to-market strategy or the way you build a product? Like, is there counter positioning against the big, 800-pound gorilla in this category that we know, and it might be at a basketball game, but he's definitely not taken days off recently.
Yeah. So great question there. So basically at NIT, what we've really what we're putting hanging our hat on right now is this idea of researcher-driven AI, right? So we're an AI native company. We started the company a year or two ago when AI was still not as prevalent in our industry as it is today. But what we realized is that you can run this data through the AI, but really what it's missing is the context that the researcher brings, understanding how this shows up in your business. How do you actually sell it into the organization? So throughout our platform, the way that shows up is, one, we always have the researcher at the center of how we run research. So the researcher on our platform will go in and share, this is more information about my business. Here's the context of my business. Here are my stakeholders and how they like seeing the data, so that we can get the output as close to that stakeholder ready. And then the second is we've invested pretty heavily into an internal research team. So throughout the process, all of our customers are paired with a dedicated expert researcher. And what we've seen is that gets the AI to a better spot, a place where our research customers can actually then take this. It's a really good first draft. They clean it up a little bit, and then they can share with their stakeholders pretty quickly.
How are you closing all these logos? You got Amazon, Mars, ESPN, T-Mobile, Paramount, NASCAR, Moet, Hennessy,
It's
Overtime,
an insane lineup.
WNBA.
Congratulations. Insane
crazy
lineup.
stacked for Series A.
Yeah,
I'm sure Ashton
started off with some good old hustle. I flew out, met a bunch of our first customers, just kind of figured it out. But really what we've invested, going back to this researcher-driven AI piece, is we've really invested in the human aspect of it. So we primarily meet most of our customers through events. We show up, we go to all of the major events in our industry. We show up to their offices, take them out to dinner, and invest heavily in face-to-face meetings. The other aspect is really around our...
What about NASCAR? Did you ever crush a beer at a NASCAR event for research purposes? I feel like that's a good sign of respect in NASCAR
The
culture.
NASCAR team was kind enough to invite us out to Daytona when we kicked off our partnership. So yes, they know how to have a good time for sure.
Just watch. They only drink champagne. It's just the biggest narrative violation of all time. It'd be great. So where? Yeah, I mean, you're talking about the customer, the human-centric research. Where do humans excel in this? In this problem set, in this domain, and then where does AI thrive? Like, where do you not want to delegate a piece of the work to an AI, and where do you want to spend 0 minutes of human time focused on something?
Yeah, absolutely. So, where we've seen humans really excel is storytelling, and our entire platform is built around how can we take all of the time-intensive kind of grunt work that goes into research. So think, setting up your first draft of the questionnaire, analyzing all this unstructured qualitative data, whether it's video data, open-end text data. And we've built really good AI that can get you that first draft, whether it's a questionnaire or a final report. And really where the human researcher comes, both our internal team as well as the external kind of partners that we work with, is how do we take those insights and tell a really powerful story here, something that will actually drive action from our marketing team or product team or strategy team.
Yeah. How important is it to build a liquid supply of people that are willing to answer surveys? When I think about Amazon, Mars, ESPN, T-Mobile, Paramount, NASCAR, Moët Hennessy, JBL, like a lot of those research projects are probably just, I want to know how Americans feel about my product. It's not this hyper specific, talk to just my customers, my 10 people. I can probably call those people if I'm running that company. But if I want to know how is my brand perceived nationally or globally.
T-Mobile also can do like easily survey active customers,
their own customers,
new cohorts, old cohorts.
Yep.
Whereas like Moët can't necessarily.
And so how important is it over time for you to be able to bring surveyable people to a platform?
Yeah. Well, first of all, I would say we're very data agnostic, right? So we work with our partners where they layer us on top of their existing customer list. We work with some of the larger panel companies in our space. But as making that stance that we're data agnostic, one thing that we've invested a lot of energy in and technology in is how do you make sure the quality of that data is really good? So a big problem in our industry today is data quality challenges. There's fraud, there's bots, there's a lot of not so great stuff happening. And so what we do is we've invested a lot in our AI tech too, especially if you think about video, for example. If you collect video responses, you can actually see the human on the other end. We analyze across 7 different plus parameters to make sure that that human is who they say they are and actually speaking on topic. So the data quality is an area we've really stood out for our partners as well.
Very cool. Anything else?
No, this is
great. I think we're good. Thanks so much. Congratulations on the progress. We will talk to you soon. Have a great rest of your day.
Cheers.
Talk to you soon.
Let's rip some timeline.
I
have been waiting for this. You
have some breaking news.
Breaking news.
Sahil Bloom, 5 Types of Wealth. Over 300,000 copies of that book sold. Incredible.
Not surprised.
You know why?
Sell 1 million.
Because we reviewed it on the show right as it went live. And remember, interestingly, we tried to guess the 5 types of wealth.
Cars, watches, art, homes.
Horses, yeah. And we were wildly wrong. Apparently, it's something about like living some sort of balanced life that's not that materialistic. Money's only one of them.
Yeah, did we put it in
He had a little bit of a contrarian take, yeah, but it's done very well, and congratulations to Sahil. What a run. 300,000 copies of that book sold. Absolutely massive number, so congratulations to him.
Well, Palantir earnings came out after the close, north of $1 billion in revenue for the last quarter, up 48% year over year. That beat by 7%. Going to be 1.08 billion next quarter.
Hit the gong again.
The estimate 11%, and then they raised their full year guide 6% from last quarter. And they had already raised it 11% from the start of the year. So they have 57% free cash flow margins.
Congratulations.
Bad, and 81% gross margins.
81% gross margins.
So
congratulations.
Doesn't look like a consulting company to me.
It does not. They're beating the allegations.
Jammin at Altimeter broke it down. Let's see how it's doing after hours.
Benjamin, Jammin.
Up another 3% after hours. This is about to be,
it's a big company. It's going to have to be Mag 8. Throw them in there.
Mag 8, nice round, nice number.
Chinese number of wealth, right?
That's right. That's right, John. Of course. Let's do some timeline because I love it so much.
I love timeline.
Doomer says,
what you got?
So Dave Asprey posted yesterday, huge news for gym bros. A new study reveals that incline walking burns more fat than running.
We've been getting into this. We've been doing this because of the bodybuilders. When they're on cuts, they do incline walking, and it's so much easier to get yourself into the mood of just walking at 3 miles an hour on a 10% incline.
Total bro science victory.
It's total bro science victory. This is hilarious.
Doomer says, jog cells absolutely malding and seething over hike chads.
It's remarkable. Yeah, I mean, when you do that incline walk, you throw on a podcast, throw on some TBPN, listen to us, watch this, and start burning the fat.
Mickey Friedman says, it's crazy that an LLM can win IMO gold before making a single funny joke. The only thing
it's not that
they
surprising.
do that format where it's the be me jokes.
Yeah, they're pretty good at that. But in general, RL or funny jokes seem to be RL resistant, whereas the IMO is easily defined by a benchmark and therefore hackable. But still, still valuable. And I like this. I prefer that it focuses on IMO gold because I can't do that, but I can make funny jokes.
Tay Kim, author of The NVIDIA Way, says, here's what I would do if I was CEO of Apple. Quadruple the RAM in iPhones to 32 gigabytes and have Max model at 64 gigabytes. Memory is oxygen for local on-device AI. More equals smarter and more powerful. Take the margin hit. Memory isn't even that expensive. Buy Mistral or Anthropic and invest $100 billion in AI compute annually. I don't agree
this
with
is hilarious.
this take.
How much does it cost to buy Anthropic right now? $500 billion or something?
No, I mean, the bigger issue here is one, I just don't see France selling their national AI champion.
Totally.
Why would Europe ever allow that?
That's the whole point of the company.
And then Anthropic is dominating in code gen and very clearly could be it seems like they could be $1 trillion business someday just generating code for the world.
Yep.
So I just don't see Apple, also Apple buying a, whatever price they would have to be pay.
Yep.
And then I don't know, keep the core code gen business running. And then,
well, regardless, shout out to Tay Kim. He's sending us some books of his book, The NVIDIA Way.
But
it's an interesting post.
Agree. He says Apple has the capital. Apple now knows the AI computing shift is existential. Where is the bold action and urgency? They are the only big tech company not in the AI race.
Completely agree.
Take the short-term pain to have long-term relevance.
Yeah, should definitely invest. Might tweak my recommendation, but love the thought experiment and very interesting. And we should switch to the Mark Gurman article, Power On. Apple has a new answers team working on a stripped-down alternative to ChatGPT for world knowledge as it looks to catch up in AI. So Apple has a new answers team developing a stripped-down rival to ChatGPT. This, of course, is distill the model down, focus it, and you're going to have this. There's this idea that you're going to have the really smart genius models, the big models, training smaller models for specific things. You're going to have one that just does code, one that just does, Wikipedia, one that just does weather really well. And so if you can just kind of route between those, you can be very efficient, and you can probably run it on an iPhone. So,
equally important, Mark Zuckerberg says, without AI glasses, you'll be at a cognitive disadvantage. Hopes Revenge says, good. I'm used to it.
Buy my product or you
One
will
of the
be
best
stupid.
posters in
Hopes
history.
Revenge is so good. Gotta have him on the show.
Pavel Asparuhov, former guest and friend of the show, says, people will congratulate me on raising money. And it's bro, I am poor and stressed out. It should be condolences.
Did you talk to Pavel in New York?
And Will says, tell that to your ramp equity. Pavel says the Patek store doesn't take ramp shares.
Well, they should. They should.
It's better than cash. Better than a store of value.
Exactly.
Sam Altman says, entering the fast fashion era of SaaS very soon. Gets 16K. Banger here. The thing that's interesting here is my immediate thought was, look at the performance of LVMH during the fast fashion era.
True.
And it, going on, if you extrapolate this example, it says that, craft-driven luxury products will endure. Obviously, fast fashion is much more about signaling and trends, and SaaS can be very utilitarian. Were you gonna hit a gong or something?
No, I was looking for the red flag. We have the red flag somewhere, but I think the fast fashion we have a red flag in the studio. Ben, you want to come wave that on camera?
I'll wave it.
Wave the red flag. But the reason I'm waving the red flag is it's more like bait, maybe red flag's not quite the right one, but the fast fashion is there's a different there's a different term here, which is like disposable software, and I like the formulation of like the meme generator era of SaaS. The meme generator era of SaaS, where everyone got the ability to make memes on their phone, and that's just a lot less controversial because it's like democratizing. This is it's like the Teespring of SaaS. It's like I want to be able to print my logo on a T-shirt at the click of a button. I want the Shopify for SaaS soon. I want the ChatGPT for SaaS. The fast fashion feels like very sloppy, but all the value and all the creativity being housed within Shein and Temu. And I don't like that as much. It's way more cooler when you see someone who's wearing like a small merch drop from one artist that they like, and you're like, oh, that expresses something that's unique. And it's only made possible by the industrial capacity that is so ramped up to the point that you don't just need to have the Nike shirt and everyone has the same shirt. Everyone can express themselves differently. Like when the screen printing era, I remember like you used to just be able to take spray paint and just spray paint a logo on a shirt. Like that is what I'm looking forward to. We don't know how to do that anymore. But yeah, I mean, you walk around Venice Beach or New York City, Times Square, you'll see like unique shirts that are very weird, cringe usually. But I like that idea of like democratizing the creation of SaaS so that there can be one-off websites. But that doesn't feel fast fashion to me. I'm sure there will be fast fashion, but
I think it's more we've talked about this. Like apps as memes. There's a lot of apps.
I like that.
There's apps that should exist that you shouldn't spend time producing them because they don't have like an obvious business application. There's also apps that should exist but shouldn't have 10 engineers working on them. They should just have one person who loves building the product. My dad showed me an app yesterday that you just set outside. We were having lunch in my backyard, and he put his phone down, and it just was using the microphone to pick up which birds were in our yard.
That's super cool.
Within like 5 minutes, it had identified like 10 different birds and was listing them out by name. And
that's really cool.
He was showing me the profile, and he can see all the birds he's been around. It's like
insane.
And so there's apps like that I just think like probably a great small business that But
way cooler if you don't need to go and raise a bunch of money and then have this like cap table pref stack like hanging over your head. It's just like
that might be at its best a $5 million a year business. But you have a small team on it, and
so if the fixed cost of developing the first version is $5 million in engineer salaries, it's like you never really clear the pref stack. Whereas if it's just an idea and you can just get it up and then run it, it like can actually be a good business. So I like that. I like that world.
Well,
anyway, we have a funny take in the chat from Azar talking about Apple should buy Perplexity, which we've talked about before, and I think that one makes more sense than Mistral or Anthropic. Much more gettable at the current valuation, 18 billion versus what's Anthropic at 150 or something? 160. That seems, and then they'd have to pay more, obviously. But I don't know why he said Sony. Sony is an interesting choice. I don't know what.
Sonos?
Sonos would be an interesting one for sure, because then they could. They already have.
They tried to do their speakers thing.
But Sony, they make great cameras.
Perplexity is
a
good example where Apple doesn't need to become a foundation model lab. They just need to be able to build good products. And I think Perplexity's consistently built pretty solid products.
I think at some point, if you think like iCloud is not hosted on AWS. Like they did build their own data centers eventually, even though they're not a true hyperscaler. I could see them just being like, we trained our own models so that we know the legal risks. And I think that's a lot of what the hang up is with these partnerships and stuff is like, there's a lot of legal risk, a lot of brand risk, hallucination risk, all the stuff that the foundation model labs are grappling with, whether it's AI psychosis or, intellectual property infringement or hallucinations or just bad recommendations, mediocre products, all the rough stuff. It's great when that lives in the founder mode startup world. Apple's not in that world right now. And so it makes it, but eventually you will be able to develop these foundation models in a way that obviates all that risk. So
totally.
Anyway.
While we're at it, Mark in the chat says, this has quickly become my favorite show.
Oh, thanks, Mark.
Well,
that's great to hear.
Your last message has quickly become my favorite message in the last, no, I appreciate it, Mark. We have another post here from Matthew Zeitlin. He says,
Did you see this one from Frank? Sorry. Todd Graves should lead product at Perplexity. That's the CEO of Raising Cane's chicken fingers.
That's insane.
Someone's clearly listening to Founders Podcast 100%.
Todd Graves should lead product at Apple.
If you were a pre-Founders Podcast Todd Graves fan, hats off to you.
Apple should acquire Raising Cane's.
That'd be amazing. Put them right in the Apple store. You come in for some chicken, you pick up a new iPad.
Strategy.
Do you need the iPad? Maybe not, but you enjoyed the iPad, you enjoyed the chicken. It's great.
Matthew Zeitlin says, I only trust reporters that are fully locked in. And this is from a piece on Joe Weisenthal.
In the New York Times.
In the New York Times. They had an amazing
Odd Lots
profile.
is crushing.
Yesterday, he says, Mr. Weisenthal, who said he used nicotine probably more than is optimal and was going through a full 15-pouch can in a day.
Yeah. You know what's better than using a nicotine pouch? Developing a new nicotine pouch with your co-host before you launch your podcast.
As a way to kind of test if we have, on air.
Exactly. I was reading this and it's like, how are we the more extreme version of this somehow? It's like extremely odd and rare that we would be, but we actually did build a nicotine pouch brand for finance bros called Excel. And we launched this product before launching this podcast. And that was kind of where we got this. We realized that we were onto something because we sat down to record a promotional video that was supposed to be like 3 minutes long. And we wound up yapping for over an hour.
Ben was like, did you guys prep for that?
Yeah.
What was that?
Ben was like, what was that?
So we'll end on this post.
Okay.
Lena says August 1st. Lena, we just go by her first name, talk about her a lot.
She really is the biggest Lena in tech.
She says, a great reminder that letting startups grow into independently successful businesses rather than be bought up by existing giants can generate enormous value. A win for employees, investors, innovation, and the public.
And investment
Obviously, talking about Figma.
Yep.
And Shea Levy says, Lena Hand cuts off the right hand of a genius.
Lena Khan cuts off the right hand. You said Lena Hand.
Lena Hand cuts off.
Lena Khan. Lena Khan cuts off the right hand of a genius pianist who nevertheless perseveres and produces a one-handed masterpiece for which she then takes credit. Yeah, interesting. I don't know. It's a hot take in tech.
Yeah,
lots of people relitigating this one.
Alex at Andreessen said something which was
turned out well.
In a free society, we should let people do things if they're not creating immediate harm, right?
Yeah.
And so deciding how other people are going to run their business is against.
I still think you had the best post about the Lena Khan news. I'm wondering if I can pull it up, but where was it? It was you replying to Lena Khan. I'll put it in the chat.
You found it?
I found it. It's in the timeline chat now. But if we can pull up this image of Jordy Hayes replying to Lena Khan says, a great reminder that letting startups grow into independently successful businesses rather than being bought up by existing giants can generate enormous value. And Jordy Hayes shared a picture of a soldier who's fought a war, and there's a dolphin and rainbows in the background. It's
just like this guy who just lived through, he's clear, he's in paradise, right? There's tropical rainbows and
there we go.
And it's like, he made it through a war and he's smiling now, but clearly, been through it.
Yeah.
So Lena really made the Figma team. She put them in a dark place.
Made them earn it.
They made it.
They earned it though, and now it's a better story. I don't know. Lots of nuance there.
Well,
thank you for watching. Thank you for listening.
It is going to be a massive week in technology. There's some news dropping later in the week that we will be covering live. We'll be up in San Francisco.
We're excited.
And in the meantime, I can't wait for tomorrow.
Yeah.
Leave
we'll
us
talk to you later.
a 5-star review, Apple Podcasts. If you're listening on Apple Podcasts, I recommend switching to a more video native platform like Spotify or YouTube. and we appreciate all your support.